All right, guys, what do you say we get this party started? Good morning, good morning. 21st of June. Bubba. Guys, how's everyone doing today? Hope you're feeling well. Hope you're ready to take on the day. Yesterday afternoon was nice, a lot of movement. We're going to do a lot of historical today. Go back, make sure that we're checking advantages. Hey, good morning, Alan. Um, You know what? Yesterday was an amazing day because I told the class, I said, hey, if there's something that you want to work on, send me an email, send me a message, let me know. I got an email yesterday, and it's going to shape class a little bit today. One of the hardest things about teaching the software for me is often I don't know where you are at. So if you're brand new with the software, and you don't understand something, but you're not letting me know, it becomes difficult. If you're losing trades, but you're not sharing them, it becomes difficult for me to help you. So um, I'm going to go into, and I'm going to let the class fill up a little bit. We're going to talk a lot about the path. But before we do that, this is every morning for me. I come to forexfactory.com and I open up my news calendar and I'm looking at it, June 21st, and I notice a big red box at 10 a.m. And at 10 a.m., Fed Chair Powell testifies. Guys, that can move the market. It can make the market jump and spike. It can create a scenario where the market's virtually untradeable. It's not guaranteed to, right? Not today, Ron, because of the holiday. Whenever there's a holiday on a Monday, they move inventories to Thursday. It happens pretty consistently. So if you look down here tomorrow at 11 a.m., it's going to be crude oil inventories. So not something we have to worry about today. Really, the only thing we're looking for today is that 10 a.m. spike, guys. It'll be right around our first break. It's a great opportunity knowing, hey, Jay Walker, nice to see you in the room. 1913. I'm going to assume you're not 110 years old, but if you are, good for you. Way to be in here. Welcome to the classroom. um, 10 a.m., guys, great opportunity to just kind of sit on your hands. Go refill your glass of water, pour a second cup of coffee. Anything other than putting yourself right in the middle of that freight train. Guys, the class has two parts to it. The first part is me talking about rules, me talking about what we're looking for, what we're doing. I'm going to talk a lot about a path, getting you where you want to be. So, Jay Walker, the first part of the classroom is designed specifically for you to give you everything that you need. And then from that, it's just a little bit of study, it's repetition, it's becoming comfortable with the concepts. So once I go to news, guys, I'm going to go to the education page. And again, all my new people are tardy to class, so I'm going to go through it. I'm going to go through it slowly. Software user guide is your NinjaTrader how-to, guys. If you are having questions about scaling charts, setting up stops and targets, I need you to raise your hand. I need you to say, hey, Mark, I need some help with these things. Scaling charts, stops and targets are really pretty easy. Opening, closing NinjaTrader, anything and everything you need about using NinjaTrader is really going to be in this room. The capture software. This is going to be one of your key sections, guys. Everything that we do in this classroom is done via pictures and then conversation. Since you don't have the advantage of a microphone, you're going to have to take pictures and share them in class and tell me what you're looking for. This video runs through it, and you'll notice in the video it says, if you write your rules on your charts, you'll learn them faster. So important for you. And the capture software is very easy to use, and I'm going to use it real quick. I'm going to click this giant red button that says capture. If I hover over just one chart, it's going to capture one chart. It's going to give me only one chart's worth of information. Guys, the way we teach these trades is it's a two-chart process. I want to see your big chart and your small chart. So if you left click and drag from the upper left-hand corner to the bottom right, make sure that you get those timestamps in there. Make sure that you get those prices in there. Just release, and it's going to give you the option to take a picture. Click on your camera icon, and it's going to create an image preview. Guys, I can't stress this enough. If you write your rules on your charts, you will learn them faster. There are arrows, maybe if you want to point things out. Excuse me. There are shapes if there's something of interest, but the most important thing that you can do is left click and drag on this call out and write your rules, guys. Write your rules on your charts. Why? Because it's repetition. You're reinforcing. You're understanding the visual versus the words, and you're putting them together. Write your rules on your charts. Tell me how you felt, guys. If you have a specific question, put it on there. Hey, Mark, I drew a box around this right here. Can we talk about what that magenta line means? At which point, I'll get you there. And Gary, you're absolutely right. You'll get better feedback when you write your rules. Otherwise, I have to guess what you were thinking. And I'm pretty good at guessing what you were thinking, and I can turn it into something. But guys, you're going to get to where you need to be faster with this little bit of information. Once you have it, click upload. It's going to put that picture into the cloud. It's going to go to screencast. It'll create a shareable link. Copy. John Novak's wound up today. And you can pop that right in the room, guys. The first hour is about talking about rules. The first hour is talking about the best looks, talking about advantages. Hey, good morning, Luciano. And John, in his lovable manner, says, we know what you're thinking, right? Everyone needs to stop thinking and just follow the rules. That's the trick. And it really is. Thinking gets us in trouble. I teach simplicity. I can't stress this enough. Guys, I teach in the most basic manner that I possibly can. It's up to you to embrace it, to use it. And most people do, and they do very well. Guys, once I've put that picture in the room, I've got that screencast link in there. I can go to my tracking sheet and I can drop, if it were a trade, I can drop it into that first slot and use my trade journal to talk about what I did, why I did it, how I felt, whether or not my rules were met. And then if it's one of those rules-based trades, guys, if it's a 100% rules-based entry, I'm going to take that same link and I'm going to put it into my spreadsheet, because the goal is to be able to follow rules. The goal is to be able to take these rules, to take the advantages, and then turn them into a consistent plan, something that's been proven to win more than it loses. So we've got the spreadsheet, you've got your capture software, guys, and these are really, John, have a great day. These are really the two most important parts of what you do, because, guys, there's a very, very specific path. It's a proven path. It's a path that most of you are going to fight. I don't know why. I fought it, but we tend to. And, guys, it has a lot to do with the fact that we're human, right? We're brand new. I don't know about you guys, but my previous life, I was pretty stinking good at it. I was the guy with all of the answers, not the guy with the questions. So for me to come back and assume the role of a student, it took a little adjustment. It's okay if it takes little adjustment. The idea is that you're a student, that you're learning something that can create wealth, that you're learning something that can create consistency, that you're learning something that's going to give you advantages, guys. And there's a step-by-step path, and that path starts with posting your trades in the classroom. Every time you take a trade, post it in the classroom. One of the biggest mistakes that new users make is they withhold information from me. Guys, my job 15 hours every week is to give you feedback on anything and everything that you do. And a lot of people believe that just because they've bought the software, just because they lease the software, that somebody owes them success. Guys, this is your path to success. Post your trades in the classroom. Take advantage of having that mentor, of having that feedback. Tiger Woods had a swing coach, right? Wayne Gretzky, pick your sport. It doesn't matter. All of them had coaches. All of them had mentors. Some of the greatest minds in the world had mentors. had people that knew things just a little bit better than them and gave them some direction. And they gave them direction from the outside looking in, from looking at what they're doing without an emotional attachment and helping them to do it better. Guys, that's my job every day. So if you're taking trades and struggling, but you're not posting those trades, you're shooting yourself in the foot right now. If you are blowing out Apex accounts one after another, and you're not sharing in the classroom so that we can fix the problems, guys, this is no longer a me thing. This is a you thing. Embrace that idea that getting feedback in class will get you to where you need to be. And then use that spreadsheet. Guys, the spreadsheet is designed for you to take everything that you've done the previous day and critique it. Go back to it with a fresh set of eyes, without the adrenaline, the emotion, without the anxiety of worrying about a win or a loss. Because when you're brand new, you're going to worry about those things. But if you go back and you study what you did yesterday, what worked? What didn't work? What made you comfortable? What kept you nervous? What felt forced? Guys, answer these questions every morning. I went back and I looked at my trades yesterday, and moment of honesty, what worked? When all of my charts agreed and momentum was correct, it worked, and I did very well. What didn't work? Guys, I trade the NASDAQ sometimes. The NASDAQ is busy, 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 and it's fast. And what I've done is, through filling out my spreadsheet, through looking at my pictures, I realized that if you're a NASDAQ trader and you fight the small triggers on your small chart, you tend to get run over. Entries on the wrong side of the small triggers don't work. Guys, this is a pattern that took me a few losses to recognize. It took me a lot of pictures to recognize, but now it's a pattern that creates success for me because I go back and I study my trades. And guys, just like you, I have a mentor. John Novak and I talk every day. When I take a trade, I send it to my brother. When he takes a trade, he sends it to me. And we give each other feedback, that kind of objective, coming from the side. Guys, this little study each morning is going to prepare you for the day. It's going to accelerate the learning. I promise it will. Scout's honor. So use that first page of your spreadsheet. Get those trades in there. Use that second page. Every time your rules are met, take a picture, get it into your spreadsheet, study those pictures. You're going to burn them into your mind, those best of the best. So that's the most important too, guys. Post your pictures, right? If you're not doing it, this is your invitation right now. Change your ways. I see a lot of names in this room, and I know a lot of you, when you do post a picture, it has Apex in it. Guys, if you're not just absolutely crushing it on your Apex accounts, get a little feedback. It's usually small fixes when you get to that point. We're going to learn the trigger lines and the Fibonacci rules for when it's okay to trade. There's a reason that this is the first thing, guys. You have to learn your rules because your rules provide advantages. When you learn the rules for the trade, you're going to be able to recognize the advantage of momentum. You're going to recognize a clear path, and you're going to recognize an entry area. Hey, good morning, Tan. Your ability to recognize these advantages, guys, is making you a chart reader. And that's what you are as a trader. You're a chart reader. You are looking at the market and understanding where it's likely to continue, where it's likely to go, and where it's likely to stop. And that's the focus, and that's what these rules are going to teach you. So once again, I kind of ask, if you have a challenge with the rules, let's talk about it. Tan, we can talk about management for sure. So what I'm going to need from you to make that the absolute best possible way is show me a picture of a trade. Hey, good morning, Jay. Show me a picture of a trade, and I'll talk a little bit about it too when we go through. But I'll give you the idea. Stops go where the market shouldn't, if that makes sense. Stops go where we don't expect the market to go. That's why they're stops, right? And that's a basic synopsis. But then you get into points where maybe you're trading into areas, right? You've reached a potential target and you don't want to give a lot back. And then there's a billion ways to do that. So I'll show you the where they shouldn't go, and then we'll talk a little bit about making decisions. But guys, I want to reiterate, if you're not posting your trades in class, I can't help you, right? So we're going to learn the rules. We're going to make sure that you're comfortable with the rules. Make sure that you know where those rules happen. And then your job is to simulate your trades daily, guys. The simulator is as close to real life as you can possibly get. There will be the occasion where maybe it's a tick or two off. Maybe it pulls you out. Maybe it doesn't let you get into a trade. Guys, that happens. But that happens in the real world too. You'll have the market hit an entry and not get that entry. You'll have a market hit an entry with two contracts waiting and only one gets filled. That's a very real part of the market. If there's nobody for the other side of your trade, guys, you're not getting that trade. You'll see it at profit targets. You'll see it on entries. Simulator replicates that pretty well. The only thing that's different is you almost always get your fills in Simulator. The idea is that you're going to simulate and you're going to post your pictures in class every day. Every time you take a trade, you're going to post it. You're going to write your rules on the chart. You're going to tell me what you were seeing. And guys, the most important thing is you're going to let me know what your rules are. Mark, this is what I need you to hold me accountable to. I'm looking for odds favorable momentum. We had an instance yesterday where somebody said, I had odds favorable momentum. And when they posted their picture, it turned out that they didn't. So it turned into a great conversation. Maybe it was about entries, right? Maybe it was about targets. Maybe it was about divergences. But guys, if you write your rules on your chart, get those pictures in class, it's going to be advantageous. We want to make sure that you're practicing the correct rules, that you're giving yourself the advantages. If you are simulating and you're practicing the wrong rules, maybe you're like, man, I'm just going to jump in on 100 lot because I'm going to be simulator rich. You're not doing anything to build muscle memory for long-term success. We're going to simplify, guys. This says 2 trades. The first trade that we talk about in this room is a high probability trend trade. And I talk about the high probability trend trade not because it's the only trade you're going to take, but because the high probability trend trade teaches you to read your charts. It teaches you to recognize where the market is likely to continue. That's going to be your entry for that highest probability trend trade. Being able to recognize where the market is likely to continue is also going to give you the ability to expand your knowledge, to look at other things. Understanding where the market is likely to stop is going to be a huge advantage when you're looking for a trend trade because that's where the trend may end. Guys, understanding termination conditions is a key part of what we do. And then understanding where the market is likely to go, that's when you begin to expand a little bit and go into management. Guys, the simplification, the looking at the absolute best of the best, gives you the ability to understand things. Then you can go back and you can replay the day. You can fix your mistakes, right? If you present 5 trades in this classroom and there was a mistake in there somewhere, maybe you're trading into termination conditions, maybe your entries are too soon, too late, you can go back on market replay. You can replay, have the advantage of pausing, checking your rules, taking the correct trades, and you can see the potential when you're following those rules as you get into the trade. Take pictures of the correct trade. Bring them to class, guys. I want to see your simulator pictures. I want to see your market replay pictures. And then, guys, here's the most important part. Repeat this process on simulator until you always take the correct trades. Repeat this process in a simulated environment until you always take the correct trades, until you work the kinks out of your plan, until you are following your rules. Even if your rules aren't the high probability trend trade, if you're not always following your rules, guys, then you've got some work to do. Because your rules should be proven without a doubt to win more than they lose. Your rules should be proven to make you money. And if you're not always taking the correct rules, you're probably not always making money, which means that for you to go to Apex, for you to go live, for you to risk your capital before your plan is solid, does it make sense? Only you can answer that question, but I get emails a lot. I get conversations from people a lot. Man, Mark, I got so excited about Apex. I went in there and I blew out 32 of them. Nexgen stinks. And I say, hey, I haven't seen one trade from any of those accounts that you've blown out. Not one. You're not giving me a chance to help. So guys, there has to be a little bit of ownership. There has to be a little bit of responsibility on you. Post your trades in class, use the spreadsheet. If you're not doing that, today is day one. Let's make it happen, guys. I see a lot of names in this room that are having a lot of success with the software, and they're doing it through posting in the class and working the kinks out. It's a path that works. It's proven. I'm going to share this in the room to remind you. Put a big note on a piece of paper in front of you. Mark doesn't care if I lose. He sees it as an opportunity to make me better. Mark's proud of me when I win, whatever it takes to get you to post those rooms in the room. So guys, we're going to focus on the high probability trend trade. What's a high probability trend trade? It means that every indicator on every chart agrees for the trade. Guys, this is your best of the best. This is the one that when it comes from a reversal on your large chart typically wins 70 to 80% of the time. But this is a trade that when these three advantages are present, guys, this is the one. This is the one that you have to teach yourself to never miss. Because the high probability trend trade gives you the advantage of momentum, of a clear path and an entry area. That's the recipe for a trade. You're going to have strong triggers, no termination conditions, and you're going to be able to pinpoint that area where the market is likely to continue. Guys, understanding the rules is great, visually, verbally, but it's imperative that you understand where the rules come from. And I want to make sure that I'm very, very clear on this. Your large chart, your big chart is going to define direction, momentum, and areas, guys. That's what a large chart's for. It's a general temperature of the market. It's a broad stroke of a brush. This is where rule number one happens. Rule number one defines your momentum. It defines whether or not that market is likely to push in the direction of the trend. Rule number two also takes place on a large chart. Rule number two is going to identify termination conditions, areas where the market is likely to stop. When those rules are met, and only when they're met, you're going to turn your attention to the smaller, faster chart. Guys, write this down. This is an entry chart. The small chart is not defining the momentum of the market. The small chart is not defining termination conditions at areas. The small chart is nothing more than an entry chart. It's a way to take advantage of what's happening on the large chart using a smaller, faster chart that allows you to refine the broad stroke of a brush and pinpoint your entries. This allows you to reduce your risk, to increase your profit potential. Rule number 3 of 3 happens on the small chart. Rule number 3 of 3 is nothing more than an entry, getting you in at that place where the market is likely to continue. New users absolutely love to scare themselves out of trades on a smaller, faster chart because they forget that the large chart leads the way. So we're going to talk about the rules and we're going to talk about identifying them. And I'm going to try and find as many of those instances that I can today as we scroll back. And we're going to talk everything in advantages. Everything revolves around advantages using a two-chart concept and taking everything that I talk about. Get rid of my Nexgen live chat. Taking everything that I talk about from the educational material. Guys, the first thing you're going to do before you do anything, you're going to look at your large chart and you're going to say, what direction is the market moving? Easiest thing you'll ever do with the software, guys. If the background on your large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. Guys, trading with direction is key. It keeps you from fighting that large chart direction. And I put the question on there. If you never fought the trend, ask yourself, if I never fought the trend, how many mistakes would it eliminate? I put that question on there because I had to ask myself the exact same question. And guys, it probably pulled 30% of my losers out of the equation by not forming an opinion that the market should go down when it says up, and by not forming an opinion that the market should go up when it says down. Guys, I'm going with the flow. It's like that lazy river at SeaWorld. I'm in an inner tube. It's pushing me. I've got a pina colada. Life is good. Trade with the trend. The next thing you're going to do is you're going to use your T3 trigger lines. And you're going to define the momentum of the market on the large chart. Trigger lines have two parts, guys. There is a small trigger line, which is solid. And there is a large trigger line, which is dashed. These two work together to let you know when it's time to start looking for the second rule to be met. Rule number 1 says that you have to have strong triggers. Strong trigger lines are defined when the small triggers are crossed up above the large triggers, which are also crossed up. Trigger lines are both wide in the direction of the trend, and there should be space created between the two. Trigger lines are like scissors. When the scissors are open, it's time to cut. When the scissors close, you can't get any work done, guys. When I have this space between the two, when they're wide, when they're angled in the direction of the trend, the odds are favorable for the market to continue in the direction of the trend. Again, I'm speaking in advantages. The advantage of trading with the trend, and now the advantage of trading with momentum. Guys, when you have odds favorable momentum, you're going to hear that all the time. It's odds favorable, odds favorable. This is the best look for using that smaller, faster chart to refine it to a potential entry. On the 13.2, you're going to see these tails, these wicks. You're going to see them after the fact, and we're going to scroll back historically to look for them. When you have these wicks with odds favorable momentum, guys, that's your best of the best look for the high probability trend trade. This is what every trend trade should look like for your first couple weeks as you learn to read the software. In a downtrend, small's below the large are wide, they're angled in the direction of the trend. The odds are favorable for the market to continue down. Guys, this is your best of the best look. When the small trigger lines return to the large trigger lines, anything can happen up or down. This is what we call a weakening of the large triggers, guys. And when those large triggers are weakened, you lose the advantage. Anything can happen triggers very often are a precursor to a shift in trend, right? We go from down to up because of those weakened triggers. The momentum changes, ultimately get strong triggers. There's one of those tails. Goes all the way until they weaken to that anything can happen. There's your trend change. Odds favorable momentum, another one of those tails. And guys, sometimes they won't agree. Sometimes you'll have this moment where the large and the small maybe are different colors. Maybe the color of your trigger lines doesn't match the color of the background. If I know in order to have odds favorable momentum up in a green background, those triggers have to be green. They have to be strong. They have to be wide. Guys, these are transition periods in the market. You have the advantage of not getting caught up in consolidation and chop, because when the trigger lines aren't their strongest, you won't be looking for a trade. You're going to commit to that advantage of momentum, making sure that you have the best of the best. Guys, can I get a Y in the room if you're with me on this one? Momentum is one of the easiest things you're going to be able to recognize. But it has to be the first thing that you recognize, right? How come? Because if rule number 1 isn't met, you're never going to look for rule number 2. Can't stress that enough. Guys, odds favorable momentum to the downside. Small's below the large are wide, they're angled in the direction of the trend. I'm not clouding up my vision with termination conditions yet. If I have a tail, I'm going to circle it. How easy is that? These tails are potential entries. Notice how the small triggers have begun to work their way back. Nothing to do there. There's that best look, guys. I'm going to circle a tail again. This is only rule number 1, but this is a historical study that you can do to create an opportunity to recognize odds favorable momentum. Here the smalls are beginning to accelerate, but they haven't really accelerated yet. That's the beginning of odds favorable momentum. We'll take a look and see what it does. Guys, sometimes you're going to see odds favorable, and rather than a tail, it's a reversal bar. Sometimes trades don't work. Sometimes there may have been termination conditions right there. Is everybody good with this, guys? This is the easiest way to go back and just get this picture in your brain. Is this odds favorable? Give me a Y or an N, guys. Odds favorable momentum. Is this my best look No, absolutely not. So even though there's a tail, I'm not going to circle it. Hey, God win it all? God, Goodwin? Goodwin Atlanta won? I'm not sure what that is, but welcome to the classroom. Nice to see you. And then guys, I come back, there's some tails from yesterday. So that's rule number one, guys. Odds favorable momentum, determining that that market is likely to continue in the direction of the trend. Guys, this is the first advantage that you're going to look for. When this advantage is in place, rule number two tells me that no termination conditions should be present. I'm going to bring those three rules up again. Once I have strong trigger lines, I have the advantage of momentum. So now I go to rule number two on the large chart, making sure that I have a clear path, that no termination conditions are present. Guys, termination conditions are recognized on the large chart first. The large chart leads the way. The large chart is the most important factor. What is a termination condition? Guys, it's nothing more than a Fibonacci-based indicator that may reverse the market. And it's going to be based on a comparison of that area and the T3 trigger lines. These are the areas. The areas that may reverse the market, guys. A divergence high or a divergence low. A divergence high, this magenta line means that the market made a pivot going from up to down. That's all it is an up to down motion in the market. The market goes down and then it goes up. If there was a loss of momentum at this pivot, that's it. This cyan line forms. If there was a loss of momentum at this pivot, this magenta line forms. Guys, these pivots on their own mean nothing. They're not going to be market reversers. They're not going to be trend changers necessarily. It's just an up and a down, or a down and an up with a loss of momentum. Let's not give them too much power. But when price reaches one of these divergence highs or lows, well, then it may change the story, and I'm going to talk about how. We're also going to look at red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. Guys, all of these are large chart areas that may reverse the market. The large chart midband may also reverse the market. It may act as a termination condition, and that's a little different comparison, so we're going to cover that after we talk about the key Fibonacci areas. Let me share this picture with you. This is a great map for what you're looking on, especially if you're brand new, right? So two things have to happen on the large chart to determine whether or not you have a termination condition. The first thing that has to happen is price reaches an area, meaning that your dynamic Renko bars make it to one of those areas, whether it is support, resistance, divergence lines, but these bars come down and they hit the area. Price reaches support. When price reaches the area, you ask yourself, where are the trigger lines? If the trigger lines remain above an area of support or below an area of resistance, guys, you've reached what we call a termination condition, an area that may reverse the market, that may stop the market. The market reacts to Fibonacci, guys. That's why you have such an advantage with this software. When price reaches the area and the trigger lines remain above, that's your giant waving red flag that says no more trades into this area of support. Look at the bounce that it creates, guys. This is a bounce that would take you out of the market. This is your safety measure. Rule number 2 says termination conditions must not be true. You must have a clear path. So when do we have a clear path? You have a clear path when both the small and the large triggers break beyond an area. So if resistance is my potential termination condition, if the small triggers and the large triggers remain below, in the moment, at the time, no more long trades into that area. This area is either going to stop the market and reverse it, or it's going to break. Those are the only two options. If it reverses the market, well, then we're going to wait for odds favorable momentum in a downtrend. But if it breaks, you're going to let both the small and the large triggers get to the other side of resistance, guys. An area is broken, the path is clear when both small and large are above the area. Here, small and large are above the area. There's odds favorable momentum, and there's another one. of those tails. So guys, that's your two-part scenario, right? It's either broken or it's not. You either have a clear path or you don't. And it all stems around price reaches the area and the triggers remain below. So here's your termination conditions at a high. And this is three different ideas here, guys. The first one is using that divergence high. And I want you to see this. Initially, it's just a pivot with a loss of momentum. That's what creates that cyan line. Guys, this isn't a game changer. It's just a loss of momentum. This isn't the most powerful look in the world to make the market go the other direction forever. It's just a loss of momentum. But when price reaches, when it comes down and pushes back up, price reaches that divergence high, your trigger lines remain below. Now it's a termination condition. Now it's powerful. Now it has the potential to reverse the market. And guys, if this termination condition creates a reversal in the market, it's what we call a strong top. Your best advantage always comes from a strong top or bottom. Price reaches resistance, all of the trigger lines remain below. In the moment, no more long trades. That's it. I don't have a clear path. If this termination creates a full reversal and my rules are met, that's the best of the best, guys. That strong top creates an advantage. Price reaches one-to-ones, resistance, trigger lines remain below. Just a termination condition, guys. If it creates a full reversal, well, then it's a strong top. You can see that this one doesn't. This termination condition pushes right back to support and no trigger lines break. And ultimately, it looks like it probably continues up. We never get a full reversal. It never has the opportunity to become a strong top. Let's look at them from bottoms as well, guys. Termination conditions are designed to keep you safe. Price reaches one-to-ones. Absolutely none of the trigger lines break through. It's a termination condition. No more short trades. If nothing else, it keeps you safe from trading into an area that may reverse the market. This area will either break or it will stop the market. And if this termination creates a full reversal, it's what we call a strong bottom, a good bottom, and that's the precursor for your absolute highest advantage trade. Price reaches support, absolutely no trigger lines break, even with odds favorable momentum. Support holds, market reverses. Guys, there's that odds favorable in a tail. This is a strong bottom. And then once again, just to kind of drive the point home, this pivot is just a pivot. It's a down to an up. It had a loss of momentum. That pivot is pretty inconsequential until price reaches that divergence low. And when it does, and the trigger lines remain above, now it's a termination condition. So guys, these are examples of the market stopping, right? These are examples of that market not making it through the areas. These are your termination conditions textbook. Everything that we talk about is high probability, right? So let's talk about when a mid-band is a termination condition too. If these price bars accelerate away from the large trigger lines and reach a mid-band, your large triggers, in order for the mid-band to be considered a termination condition, your large triggers must be a full bar away. And this is what we call the gap theory. When price accelerates away from the large triggers into an area, it can be Fibonacci areas as well, but when it hits the mid-band, this mid-band behaves as a termination condition. It keeps you from going short. It keeps you from taking losses typically as price pulls back and closes that gap to the large triggers. So when you look at the manual and it tells you a large sharp mid-band if the large triggers are full bar away, there's your picture. Otherwise, we're letting price reach an area, and then we're running that calculation. Price reaches the area where the trigger lines. Is everybody comfortable with this? Can you give me a why in the room? Guys, everything that we do is sequential. Everything is learning one concept, the idea of momentum, right? And then once we're comfortable with the idea of momentum, let's add some areas. And I like to do this drill, and this is a drill that you can do yourself, guys. Right now, my software is calculating. It's making all those highs and lows. So let's scroll back. I'm going to make it bigger. Whoops. Sorry, I'm all over the place here. Get back up there. Iceman, the only thing the color of the midband means is that if price is trading below the midband, it's going to be magenta. If price is trading above the midband, it's going to be green. So ultimately, I'm going to say no. And if a blue fib turns red or a red fib turns blue, it doesn't have anything to do with the equation, because the equation is nothing more than price reaches an area, right? And the trigger lines don't break. You can see it went from red to blue. It doesn't mean go for long trades because there's a termination condition just above it. So when we come back and we look, and if I look at this first area, does everybody see, and this is kind of a big one. Oh, you're welcome. Price has not reached Fibonacci support. Is everybody comfortable with that? Price has not reached the area. Guys, Fibonacci support is not a termination condition. Both my small and my large triggers are below this area. I have a clear path, and there's a circle, guys. I'm going to leave that circle there. Here, price reaches support. None of the trigger lines have broken through, guys. This is a termination condition in the moment. And this is where Nexgen users, you have the ability to be patient. It's either going to break or it's roll, but there is no trade there. As I scroll back, small's below the large, I have a divergence low. And those large triggers haven't broken. I don't have a clear path. For a high probability trend trade, guys, that is not a broken area. That is not a clear path. It is an area with the potential to break, guys. When price reaches an area, when the small triggers smash through that area with odds favorable momentum, strong triggers can break areas. This is what we call a 50-50 look. 50% of your triggers are through, 50% are not. It is not a clear path. Rule number 2 isn't met. Does that make sense for everybody? Guys, if you're only looking for high probability trend trades and keeping it simple, this isn't your trade. But that high probability trend trade is going to teach you to read your indicators. It's going to teach you to recognize advantages. And ultimately, this might be your circle. So we'll leave it and we'll talk about 50-50 scenarios and we'll talk about advantages. As I scroll back, price reaches resistance, resistance, resistance. The small trigger lines never actually get through it, guys. And I'm one tick off of the area. I'll leave the circle, but that's probably not going to be your trade. We'll get rid of the circle. Price reaches a fib. None of the trigger lines break. Guys, this isn't your circle. We're identifying termination conditions, but let's talk about advantages. A termination condition that creates a full reversal is a strong top. It adds validity to this potential trade. It adds power to this potential trade because it comes from a termination condition. Guys, here the small breakthrough, but the large didn't. You'll notice that it's a reversal bar, not a tail. This area had the potential to break and it didn't. We'll talk about the conditions that went into it. I'm going to put a rectangle on it and we'll see what the smaller, faster chart looked like. Price reaches support. None of the trigger lines have broken, guys. I can go through and I can eliminate the circle. Is everybody comfortable with what we're doing here? There's another one of those 50-50s. Smalls are through, large are not. This area didn't break, but it pulled right back to resistance. Resistance became a termination condition because all the trigger lines were below. Gives me a full reversal. Guys, here is textbook. Price reaches resistance. All of the trigger lines remain below. Resistance holds and the market heads down. There's one of those 50-50s. We'll leave that one. We'll see what it looked like. Sometimes areas overrun. But do you see how it overran without the advantage of momentum, guys? Rule number 1 wasn't met. Probably kept you safe. Price was directly into resistance. Look at the bounce. Not our trade. Guys, 90% of what you do throughout the day is going to be waiting for advantages to be met. 90% of what you do throughout the day is going to be reading your indicators, gauging those advantages. If you have questions about potential termination conditions, if you have questions about strong tops or bottoms, guys, it's imperative that you take a picture and you post it in the room. Let's have a conversation about it. So we've got odds favorable momentum, guys. The large chart says that you have strong trigger lines. The large chart says that comparison on areas has produced no termination conditions, no areas likely to stop the market. Guys, there's one other termination condition that I want to talk about. And I'm going to scroll down. Write this down in big black fat Sharpie. This is the only termination condition on a smaller chart. Guys, this is the only termination condition on a smaller chart. A blue fib, a single blue fib on a smaller chart is not a termination condition. A 1-to-1 on a smaller chart is not a termination condition. The only termination condition that I'm respecting on a smaller chart is 3 divergences in the same location. 3 divergences means that the market has lost momentum 3 times in the same price range. This can terminate a trend. Guys, it's important that you understand this. This blue fib is not a termination condition. 3 divergences in the same price range is. This blue fib is just enough to give me a push to the perfect entry. Thank goodness there was a blue fib in the way. But 3 divergences may reverse the trend, guys. It may push that market up. It may create a temporary or a permanent turn in the market. 3 losses of momentum becomes more powerful when your small trigger lines work their way inside of the large trigger lines. Remember, we had odds favorable momentum. The look is the same, even on a 5-1 chart. Anything can happen triggers. Looks exactly the same, even on a 5-1 chart. So 3 losses of momentum coupled with anything can happen triggers becomes even more powerful for a potential push up. It becomes even more powerful still when your third pivot is higher than the previous from a low or lower than the previous from a high. Price couldn't exceed the previous price pivot, and we've lost momentum 3 times. Guys, it's a head and shoulders pattern. So if you've been struggling with letting areas on the 5-1 scare you out of trades, if you've been struggling with thinking that the look is over because we're bouncing off of something, guys, just recalibrate. 3 divergences in the same location may terminate the trend. It's very powerful. When it happens on a large chart, it's even more powerful, right? You can expect bigger moves. You're going to use 3 divergences on a smaller, faster chart to keep you out of scenarios. Maybe you have a clear path. Maybe you have odds favorable momentum, and that market seemingly turns from nowhere. 3 divergences on a smaller chart will help you identify this look. You'll be able to see change just a little bit faster. Guys, is everybody comfortable with that? We're going to go back to where do we find things real quick. Large chart, direction, momentum areas, right? The trend, the advantage of momentum, and then areas. Let that word be key for you. Areas, fibs, yellow 1-to-1s, divergence highs, divergence lows. Small chart's just an entry. So our exit points would only be on the fibs that come from the large charts, or do they count on the 5-1? So Jay Solar, let's talk about entries before we talk about exits. Can we do that real quick? But you're absolutely right. And let me show you an example. Jay Solar, if I'm in a trade and I'm short, let's say I'm short from right here and I have all this momentum, I'm looking at this fib on the 13.2 as a potential exit, right? It's not a termination condition yet. So I'm using those large chart areas that may create a bounce as a target. If I'm in a long trade, I'm using these large chart areas as a potential target. These are the areas where the market is likely to go. But Jay Solar, there's one thing that you have to add in there. Your 13.2, your large chart, contains fibs from 3 different time frames. Guys, if you're not running synthetic data on your NinjaTrader 8, you're missing out on these areas. Your 13.2, designed in the plan to help you recognize termination conditions. There's going to be skinny ones that are the 5.1, fat ones that are the 21. And guys, there's going to be the native ones on the chart. These are your fibs and where they come from. So Jay Solar, hypothetically, and I'm going to try and get a little creative here. And let's see if we can find an example. So this is a 5.1 fib. It's skinny, it's going, it creates a beautiful target. It's on the 13.2 for a reason. And if I scroll back, it doesn't negate the long trade into it, but this is an instance where I might use that 5.1. The synthetics on your 5.1, if you, I'm not a tech guy. Indicators, T3 fibs, Pro Trader, synthetic. This is higher time frame, 21.3, plot support and resistance. I'm going to make that false. This is my 13.2, plot support and resistance. I'm going to make that false. I'm going to click apply, and it's going to recalculate my chart. So yeah, let's get that noise off of there, right? If you're really using the 13.2 for areas, you're in a good spot with that. So once I close this out, a little less noise, right? I got rid of all those 21. Does that help? And if you need more help with that, you can go to Jason. But what you're doing is where it says plot support or resistance, make it false. So let's keep it simple. Awesome. Let's use those lines. And guys, what's the only termination condition that I'm looking for on the 5.1? There's 3 divergences in the same location. Absolutely. Notice how it lines up with fibs. Notice how the triggers were weak right inside. 1 divergence doesn't scare me. 2 divergence doesn't scare me. 3 divergences might take me out of a trade, might keep me from attempting that last trade. 3 divergences in the same location is happening right now. And look, it's happening right at 1-to-1s with absolutely no trigger lines through it, guys. This is enough to keep me from taking a short. I'm into an area likely to stop the market. That's termination conditions defined. And look at that. If you tried the mid-band, you got run over. Guys, these rules are designed to keep you safe. These rules are designed to give you advantages, and it's the advantage of a clear path. So remember where they come from. And I'm sure we'll see ideas after we talk about entries. But we have the advantage now of momentum. We have the advantage of a clear path. Guys, let's talk about entries. Let's talk about finding the spot where the market is likely to continue. Is everybody good so far? Odds favorable momentum sets the tone for everything, guys. Without odds favorable momentum, why bother looking for a trade? A clear path is imperative. It keeps you from trading into areas that may create large bounces, that may terminate a trend, guys. Without a clear path, why on earth would you want to risk your money, right? Let's take those 2 advantages. Let's let them be true on the 13.2 chart, on your large chart, and then let's refine. Let's refine that broad stroke of a brush, right? Let's refine that direction, that momentum, that lack of areas, and let's pinpoint that area where the market is likely to continue. Because guys, say it with me, what kind of chart is that smaller chart? It's not a momentum chart. It's not an areas chart, guys. It's an entry chart. It's a let's get in at the absolute best of the best spot. Doesn't even have to be an exit to Jay Solar. Do you know what causes an exit on the small chart? 3 divergences, right? Three divergences. Why? Because three divergences may be a termination condition. And if I have a termination condition, well, then my rules are no longer met, and I want to get out of that trade. So Jay Solar, let's talk about entries, and we're going to come back because I think what you just said there is huge. I think it's going to create a great opportunity. But let's talk about the best entry first, guys, because the best entries create manageable trades. The better your entry, the more manageable the trade, the less risk, the more profit potential. When the 13-2 is giving you those advantages, when you have momentum, when there's nothing in the way, we're in an uptrend, right? How do I know? Because my 5-1, my small chart is green. My small chart has odds favorable momentum. That's not a requirement, but man, it sure makes me feel good. My my small chart says up, and my small chart has what I call favorable large triggers. Favorable large triggers mean that the large triggers, those smooth dashed lines, and your synthetic triggers, those stepped dashed lines, are one on top of the other. They're overlapping. They're working together. Two snakes behaving as one, guys. When you have favorable large triggers, when they overlap like this, you're going to get your smallest window of opportunity. You're going to have your least amount of risk. You're going to have the tightest little point where that market is likely to continue. Favorable large triggers create a huge advantage because when they're spread apart, so is your window of opportunity. Your risk goes up exponentially. Your entry point becomes a very broad stroke on that smaller chart. So favorable large triggers are key. Rule number 3 says that I'm going to use a limit order, meaning that I'm going to wait for the market to come to me. I don't chase price. I literally wait for the market to come to me. I'm going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price that's counter to the underlying trend, meaning if everything is going up, I want the market to come down to me, to my entry, to my limit order. And my limit order will be waiting at an area inside of favorable large triggers. The areas that I'm waiting for are fibs, mid-bands, and 1-to-1s, guys, and they have to be inside of those favorable large triggers. So if the large triggers, the synthetic triggers are wide, they're up, the market's going up, the momentum is up, the path is clear, and this goes counter to just normal thinking. I want the market to come down. I want a reversal bar. This reversal bar on the 5-1 chart signals the beginning of a pullback. That small retracement in price. When I get this reversal bar, I'm going to create a window of opportunity. You'll see it as woo every now and then. Guys, the window of opportunity for a long trade extends from the highest point of support. This is where your fear of missing out kicks in. Yeah, it does, Iceman. Do you know why? Do you know why you're scared to death that you're going to miss this trade? Because you don't have 1,000 pictures or even 100 pictures of the market coming back to that area inside of favorable large triggers. You have no reason to believe it yet. And that triggers fear, right? This is why we study. This is why we go back. This is why we see it. This reversal bar starts the pullback. Your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. Triggers are a moving average, guys, and this is about as techie as I'll get, which means that they're moving. When this reversal bar happens, these triggers are coming up, right? They're following the momentum of the market. They're following the path, the direction of the market, and they're working their way up, which means that this mid-band, this fib, it's going to be enveloped by those triggers by the time price gets back to it. The mid-band is a moving average. It may move up as the market moves down. So you may have to adjust your limit order a tick or two to get above it, to kind of lead it like a pass, right? From the highest point of support to the lowest point of support, guys, all I'm doing is defining where the market is likely to continue. But because of the momentum on the 13-2, right? Because of the clear path on the 13-2, I'm going to activate my limit order at the top of the window. I'm not going to trip over a couple pennies hoping to save a few dollars. I'm going to activate my limit order just above the highest point of support inside of favorable large triggers. And at this point, Iceman, I'm powerless. I don't control the market. I don't control whether I'm filled. I don't control whether or not the market does anything. But I activate my limit order at the top of that window. And I want to show you guys this. I take this picture every day because I think it's important. When I'm defining a window of opportunity, I'm going from my highest point of the triggers to the lowest point of my triggers. That's where the trigger lines are. This is not your window. Your window extends from the highest point of support to the lowest point of support. Do you see how you're able to refine even more inside of those favorable large triggers? Guys, as the market comes back, it may bounce from that highest point of support, and it may do that because the momentum is so great on the 13.2, because there's nothing in the way on the 13.2. Guys, this is your best of the best spot for an entry. But you have to come to terms with the fact that it may go to the bottom of that window. It may bounce from the lowest point. It's not guaranteed to go from the top, but that's the most likely spot because of all the momentum. It may go to the bottom, which means that you may enter the perfect trade, and it may go 6, 7, 8, 9 ticks against you. And if it continues through that window of opportunity, your stop goes where the market should not. So who asked the question earlier? Tan? Your initial stop goes where the market should not, beyond that window of opportunity. Because if the market exceeds that window, well, then that's probably not a trade that you want to be in anymore, right? You no longer have the advantage of an entry. You forfeited that. Is everybody comfortable with this concept? You're going to create a window, but you're going to enter at the top for longs, at the bottom for shorts. And guys, if you have an arbitrary stop, if you're in at 21 and you put your stop, I don't know, let's just say it's 16, right? Or 15, because you're scared to death. Or you put it at 11, 10 ticks, because you're scared to death to give up that 100 ticks. Then you're still building trust, right? Your initial stop goes where the market shouldn't. And guys, this is a trade that you couldn't keep me out of with those advantages. And this is a trade that typically wins 70 to 80% of the time. 70 to 80% of the time, this is my result. You guys can't see me. I'm pointing at my screen like a Yahoo right now. This is my result. Profit target reached. What are some potential things that can happen? Guys, your small triggers might turn against you. On your smaller, faster chart, on your entry chart, not on the chart that's defining the momentum of the market, right? This little turn of the triggers gets me to my best of the best spot. Be okay with this. All right, Iceman, this one's for you. Are you ready? This is the most real thing that you're ever going to see, guys. The 5-1 chart is a smaller, faster chart, right? There's fluctuations that are going to happen on that smaller chart. The large chart, one bar that defines momentum, one bar that defines direction, may give you 15 to 30 bars over here, guys. And there's going to be fluctuations. There's going to be tails, there's going to be up, there's going to be down. And as a new user, it becomes a little difficult to not focus on that. And I'm going to see a lot of you guys getting in right here. Who's done it? Raise your hand. I've done it. Oh my gosh, it's going without me. I didn't get filled. Son of a gun. And I jump in. Ugh, because my stop still has to go where the market shouldn't, right? But this is where your brain says, but Mark, don't risk so much. Put your stop 10 ticks below it. And you get stopped out at the area inside of favorable large triggers, and you watch that trade run, and then you swear a little bit. And your children get upset. Guys, this is the most common entry at first, right? Oh, it's going without me. I better get in. And your risk becomes huge. What else did you do? Look at how much you've shortened your profit potential. Well, that's not a plan for success, is it? Guys, here's the next thing that happens. Is the market's going to come down and you're going to decide, oh, do I need the trade? Do I need the trade? Your limit order's in your back pocket. You never activated it. You're saying, well, I'll just wait until it starts to go in the direction of my trade. And you get in right here. Where's your stop? All the way down here, right? Or at least behind the reversal bar. You've increased your risk once again. And once again, you've decreased your profit potential. And guys, both of these entries are totally normal for a new user. You're going to develop trust through repetition, right? You're going to develop confidence through the memory of success. But this is why it's imperative that you show me everything that you're doing, because I can tell you, and I'm not calling people out in a bad way, in a good way. I had a gentleman in this classroom, and this was his entry, and his risk was huge. And all it took was 2 pictures and 2 conversations, and he is absolutely crushing his entries. He's creating very manageable trades, guys. But if I never see it, how can I help you, right? Embrace that a little bit. If I never see it, I can't help you. So guys, those are common, and what you're going to find is the mistakes you make are the same mistakes that everybody's made, the same mistakes that I've made, the same mistakes that happen every day. But you can build trust through study, guys, and this is what we did. We went back and we circled tails with odds favorable momentum, and we circled tails without termination conditions. Just like this. And if they lined up with areas inside of favorable large triggers, well, then I know that I have a trade. And guys, I wanted to point this one out. There's going to be a lot of you in here that say, but Mark, there's a 1-to-1. That's a termination condition. Who's done that? I'm going to put my hand up right now. Guys, I did this all the time. But Mark, there's a 1-to-1. That's a termination condition. No, it's not. Termination conditions happen on the 13 too. What did this 1-to-1 do for you? Just come back to the classroom if you want. Come back to the classroom later. Ask a question. It's okay. If you want to replay this lesson, I'm with you now. So Jay, once we get done, let me give you the link. Go to the Nexgen and go to the live videos. So every day when I'm done, guys, I post these. The first hour's rules. And Jay, one of the lessons that I was really hoping that you would take out of the first hour, and I'm going to post it right here. If you rewatch the first hour, it'll be great. But one of the lessons that I really wanted everybody to get, and I noticed that you weren't in the room this morning, is the path, right? Embracing the path and making sure that you understand that posting pictures in the room, guys, is the most important thing that you can do. Post those pictures of everything you do. Show me what you're seeing so that we can begin to work on fixing what needs fixing. But Jay, go to the site. You'll be able to look at it. And if you have questions from the video, guys, if you ever watch something and you need clarification, bring it to the classroom. Let's talk about it. Jay, thanks for being here. So guys, we don't trade tails, we trade areas, right? Can you guys hear me? Give me a Y if you can hear me. Is it just Cam? Cool. So reboots. Guys, if you ever can't hear me, do exactly what Cam did. Let me know. Say, hey, Mark, I can't hear you, because it might be you and it might be me. And guys, I've said some pretty smart stuff with absolutely nobody listening. So guys, this is your how-to on studying, right? Go back historically. Circle those tails. And we did that earlier, right? We went back and we circled tails. And then we came back and let's look and see what they look like. And guys, I'm going to do this for the sake of the lesson. You older people who hate this. I'm going to work off of just momentum and entries for a second. Are you guys okay with that? Because I want you to be able to pick out the best of the best entry. I want you to be able to identify the market spot where it's most likely to continue. So I want to do a bar by bar with you guys. I want to take this look and I want to bring it up on the 5-1. And I just want to walk through the idea of getting into the market, getting that best entry, getting that comfort level up so that you're good with it, right? So you can get in at the best spot. But it all starts on the 13-2. Guys, I don't even need to look at my 5-1 in the beginning. And this identified a termination condition just for the sake of the classroom. So I have a termination condition that creates a full reversal. Do I have odds favorable momentum, guys? Do I have a market that is likely to continue in the direction of the trend? That's the first question you have to ask yourself always. No worries. We're going to fix that right now. Right now, we're going to fix this one. But Iceman, how many pictures of entries have you shown me so that we can fix you? Odds favorable momentum. Is everybody good? Give me a Y. I know, right? Welcome to the classroom. You told me you wanted to be successful. I'm going to hold you accountable to it. But I'm doing it with a huge smile, and it comes from a place of love, I promise. Guys, your success is my #1 priority. I need you to let me help you. Joel says we do have odds favorable momentum. Guys, Joel's been identifying odds favorable momentum from years. How about you new guys? Smart Deals, Iceman, Paul, Philly Trader. Who else is in here that's brand new? We got a couple. Vinky. I'm looking. There's a lot of you. Do we have it, guys? It's not just the triggers are wide, but they're separated, right? There's space between the two. Guys, that's the look. That's the one that lets me know that the market is likely to continue in the direction of the trend. And if I don't have this look, I'm not looking. You didn't miss anything, Jay Solar. So the next question, when I have momentum, has price reached an area? Has price come in contact with Fibonacci support? Has it come in contact with a 1-to-1? Has it come in contact with a divergence low? What do you guys think? Do I have a clear path? Finman says yes, I agree. Joel says yes, I agree. Guys, you're 2/3 of the way, right? You have momentum and you have a clear path. These both happen on the large charts because they're true. Now we turn our attention to the smaller, faster chart, right? Iceman, this is where the magic happens. Everything says down, right? Everything is down. My large, my synthetic, they're overlapping. This is a good feeling. But I hit 1-to-1s. Is this a termination condition? What do you think? Guys, my termination condition was up here. That's not a termination condition. Hopefully, it gives me a bounce. The market comes down. It's pushing. I'm starting to feel like, oh no, it's going to go without me. This is the worst day ever. What am I going to do? I'm never going to make any money. My kids won't go to college. And then I get a reversal bar. I get that beginning of a pullback. Thank goodness for 1-to-1s, right? They probably had something to do with that pullback. So Iceman, let's create the window of opportunity. Take your drawing tool. Go from the lowest point of your triggers to your highest point of the triggers. Pretty easy, right? Is everybody comfortable with this? But guys, here's where the magic happens. Here's where you use Fibonacci. Let's refine even more. From my lowest point of resistance to my highest point of resistance. Guys, that's the area where the market is most likely to continue. This is your window of opportunity, guys. This is your chart reading saying that you have momentum, that the path is clear, and that you have an area inside of favorable large triggers. My limit order goes a tick or two below that lowest point. Iceman, do you see the fib? So let's define where they can come from. And this is the best look you could ever have, really. It either comes from fibs, mid-bands, or one-to-ones, okay? Those are the areas. So let me find one where it's not quite so absolutely picture perfect. Isn't that funny that I need to find something that isn't so perfect? And that one is both of them, right? They're right on top of each other. What an amazing look. So let's go through some windows of opportunities. In this case, Iceman, the reversal bar prints from the bottom of the triggers to the top of the triggers. Here there's only one line. There's just a mid-band. That's your window of opportunity. It's one line wide. Do you see all three areas outside of the large triggers? Guys, these are not in your window of opportunity. This is not the area where the market is likely to continue. And go in the other direction. So here's my reversal bar, and obviously this is going up. So Iceman, when I'm deciding which is highest, which is lowest, the first thing I do is I find my trigger lines. Where's the top, where's the bottom, right? Because I know that the areas have to be inside. This is the exact opposite. You go in the other direction, right? My highest point is a mid-band. My lowest point is one-to-ones. Does that help a little bit? They're inside of the triggers. My highest is the mid-band. The lowest are the one-to-ones, which means that this teal shaded area is where that market's likely to continue. With only one area, it's pretty easy to find it, right? And even more so, here I do have two areas, but they happen to be one on top of the other, which just adds strength. So I'm going to take a limit order and I'm going to drop it a couple ticks below that lowest point of resistance, and I'm going to sit on my hands and I'm going to wait. Do you see how that mid-band is working its way down? It's a moving average. Guys, it's okay. Give yourself an extra tick or two. Market comes up, the mid-band's coming down. There's your collision course. I'm now in the trade at 44.26. So did the one-to-one scare me out of the trade, guys? Because there were no termination conditions on the 13.2. It's no problem, right? Did one divergence frighten me from the trade? The only termination I'm looking for on the 5-1 is 3 divergences in the same location. I didn't let either of these factors scare me. Did the small triggers turning against me keep me out of this trade? Absolutely not. My initial stop goes where the market shouldn't, outside of that window of opportunity, above those large triggers. Guys, that's 7 ticks. When we talk about stop placement, we'll talk about 12 ticks initially, but you're going to move it where the market shouldn't go. And then the market comes up a little bit beyond, and we don't panic because we're still in the window. And it goes a little bit beyond even more. And we don't panic because we're still in the window. We still have odds favorable. We still have no termination conditions. And now it's at the top of the window, right? But it's still inside of those large triggers, still inside of those areas. And then it gives me a reversal bar. It didn't go from the bottom of the window, did it? It went from the top of the window, but it still went from inside of favorable large triggers. At areas. Guys, tick or two happens. Keep yourself where the market shouldn't go. But once that reversal bar prints, I'm 2 ticks above it, which means that if I'm in at 26, I have 6 ticks of risk on this trade. Is everybody comfortable so far with what we're talking about? This is how you define your entry. Guys, my only goal for you in your first 20 days is getting in at the right area. Because once you figure out these entries, once you embrace these advantages, trades become very manageable. We're going to talk about a plan that says take profits at $100. The market only has to get to 24 to put $100 in the bank. Boom, 2 bars later. We're going to talk about a methodical, a mechanical plan that says when You reach your first target, go break even. And your second target is going to be $200 down here at 22. And if the market continues down and hits that second target, guys, you're out of a high probability trend trade. This entire trade took 4 minutes. $300 in profit, guys. Your goal should be about $250 per contract every day. You're over halfway to your goal on a 2-lot. You had the advantage of momentum, you had the advantage of no termination conditions, and you had the advantage of an entry at an area where the market was likely to continue. Guys, let this be your focus for 30 days. Practice entries. Don't practice getting rich. Don't practice being smart. Practice entries. Wait for the advantages, take the advantages. Guys, go back and practice entries without fibs. Waiting for momentum, because momentum fixes a lot of stuff. There's that tail. Here's your next tail. Pulls right back to a mid-band, inside of favorable large triggers. Pretty amazing, right? Am I worried about two divergences when I have odds favorable and a clear path? What do you think, guys? Two divergences scaring me out of a high probability trend trade? No. But Mark, it's two triggers and the small triggers are inside of the large. Two divergences. Guys, 3 divergences for a high probability trend trade. Get comfortable with the idea that you can make money twice in the same location. If you got paid all the way to 22, you're going to start getting paid again at 23.50. And it made it to your first target, and you probably got stopped out break even. But guys, it all starts on the 13.2. It all starts on the large chart. It all starts with advantages. Is everybody good with that? Because this is your path, guys. Simplicity is what I scream from the mountaintops. If you don't understand one of these concepts, then you need to raise your hand. You need to ask in class. We need to get you that clarity, guys. It's important to me that you understand these things. Right now, I'm going to give you a high probability trend trade checklist. Is the market coming from a good top or bottom? Guys, here's your video. When you have a strong top or bottom, it adds fuel to the fire. It makes everything better. It creates a little extra, right? But you can take without a good top or bottom. But you're going to have to manage it a little bit maybe. As long as you have odds favorable, momentum, no termination conditions, and areas inside of the favorable large triggers, guys, I want you to feel as though you are committed to take that trade 100%. You're obligated to take that trade to get that best entry. Discord just kicked me out. I'm going to head back that way, guys. It's kind of fun. Speaking from the great beyond. Whoops, that's not it. There we go. Screen should be back up. Can everybody hear me okay? Guys, take this checklist, make it your Bible. For 20 days, focus on entries. That's all this is. All this is finding your entry. It has nothing to do with your management. It really has nothing to do with your stop placement. It's just an entry. Oh my gosh. Jose, I'm so sorry. And let's do that. Oh, you're very welcome. Hey, post every picture. Guys, I will never quit on you, I promise. And if there's anything you need, Jay, you know that my email works and you know that I'll respond. So feel free. Go take care of what you have to take care of, though. I'm so sorry. Condolences. Guys, this next checklist is everything that we talked about in the first hour. Everything that I gave you on the first checklist, but I stole pictures from the resource materials. Is the market coming from a good top or bottom? Once again, watch this video tonight. It's amazing. Termination creates a full reversal. Full reversal gives me odds favorable. There's one of those tails. What's odds favorable look like? Here it is, what it means. This is why we write rules on the charts, guys. This is why we write odds favorable momentum. You're letting me know that you can identify it. Did you have a termination condition? Did you have a clear path? Or Did you have one of those potential to break moments? And were you able to find the window of opportunity? Guys, this checklist should be on your computer. As you grow with the software, you should study it every morning. Take a few minutes and look at it every morning. Guys, this is a pivot, right? Not a termination. This is nothing more than a pivot. This pivot pushes all the way up to resistance. It's a 50-50 look, right? Divergence keeps you safe on this one. Guys, the high probability trend trade is a trade where every indicator on every chart agrees for the trade. Every indicator on every chart is going to agree. That's what we talk about in the beginning because it teaches you to read your indicators. It teaches you to recognize advantages. It keeps you focused on getting in at the absolute best of the best spot. You will not be stuck here forever, guys. You will not be a one-trick pony. Your ability to read your charts is going to take you to what we call a medium probability trade. And guys, a medium probability trade, it's imperative that you're capable of recognizing advantages. A medium probability trade is defined as when most of the indicators line up for a trade. However, a small issue exists. Your ability to read a chart is going to identify that small issue. This will be the vast majority of your trades, guys, because the market isn't always perfect, right? But when you can identify advantages, you can start making logical decisions on whether or not you have enough present to take a trade. When you're executing medium probability trades, you're going to manage them assertively. If there's trouble in your way, you might take quick profits, get to a zero loss level, right? Your ability to read your charts is going to allow you to do all of that. Your understanding of three divergences in the same location is going to be imperative to your ability to manage assertively, guys. If I take an entry at a mid-band and one-to-ones inside of favorable large triggers, one divergence didn't scare me out. A blue fib didn't scare me out. However, if I'm in this trade and I get a second divergence, I know that I'm losing momentum. Or if it's a medium probability trade, that blue fib represents my trouble spot. I'm taking profits and I'm getting to break even. And when that third divergence prints, I can say, whoa, game over. I'm going to exit for a small profit on my final contract. This is going to allow me to not lose money. This is going to allow me to manage out of trades where I don't have all three advantages in place. Get comfortable with your chart reading, guys. On these 50-50 trades, when the area hasn't broken but has the potential to break, it's important that you don't forfeit other advantages, guys. Because when I have a 50-50 look, when the smalls break and the large don't, this is an area that hasn't broken. This isn't a path that's clear. So it's important to me, my money's worth it, that I still have strong triggers on the 5-1, that I still have no divergence on the 5-1. No loss of momentum, right? Because momentum is key. And when I have that 50-50 look, I want a small window of opportunity because I want to be able to manage my risk assertively. I want to make sure that I'm not putting 15, 20 ticks on a lower probability trade, on a medium probability trade. And I'm managing assertively, which means that this area that isn't broken becomes my first profit target. Guys, I want strong triggers. I want no divergence. I want a small window of opportunity. That's how I'm going to take a 50-50 trade. But I have to have odds favorable on the 13-2. I'm not sacrificing momentum if I'm sacrificing a clear path. No divergence, tiny window of opportunity, right? Minimal risk, strong triggers, no divergence. Guys, that's how you take a 50-50. And my final thought before I take a little break here, guys, is I'm going to try and keep you focused. This is the KISS plan. This is the Keep It Simple Sunshine plan. Thanks for that, Bobby. This is a simple plan for consistency. Guys, this isn't your final plan forever and ever. This is to keep you focused on the best of the best as you begin to get into trading the software, as you begin to get into your simulation, as you start looking for these best entries. And I put a note at the top of this, guys, this is my simple plan. Never fight the 13-2 direction or triggers, ever. If you want to be successful, guys, don't fight. My trade's the high probability trend trade, guys. These are the conditions that have to be met for me to get into it. Here's pictures of those conditions being met. Recognition through repetition. Here's my management for a high probability trend trade, guys. It's the same one that we talked about in the classroom. Initial stop is outside the window of opportunity, then it's 2 ticks above or below a reversal bar in the direction of the trade. I'm going to take $100 on the first contract. I'm going to go to break even. My second contract will be $200, guys. I'm focused on entries, mechanical. So I'm going to keep my management the exact same way. When I learn to read my charts, I'm going to adjust my management plan. And then, guys, I put this on here for the 50-50 trade. That medium probability trade, probably the first trade that you can take. The way it is spelled out, the way the checklist is presented, is the highest probability chance on a medium probability trade. And that means that you're coming from a termination condition that creates a full reversal. It means that there is absolutely no divergence on the 5-1. Guys, if you've been in this classroom any time, the most often lost trades are the 50-50 trades with divergences, 50-50 trades that don't come from a good top or bottom. So in an effort to keep you building confidence through success, that's what this checklist means. As you begin to recognize advantages, guys, you're going to get to a point to where you may take 50-50 trades. And you'll start going through this process. These are my advantages. These are my disadvantages. Is this trade still a trade that I'll take? And you'll make that decision based on your chart reading and your advantages. But in the beginning, until you have the ability to do that, keep it simple. And then a management plan for it, guys. I'm going to give you this simple trading plan. I'm going to tell you truthfully, honestly, 100%, that I've never had anybody focus only on the high probability trend trade to be able to mark yes to all 4 of these and do worse than 80%, 75%, ever. But it's a little boring, right? It means that you have to sit on your hands for a long time. It means that you do a lot of chart reading and not a lot of trading. But if you're finding 3 of these a day, guys, and let's say those 3 you hit the target, right? $900. But let's say you only hit 66%. So you make 600 on the 2 and you lose 200 on the second, right? So that's a $400 day. Doesn't seem like much. How can I live off $400 a day? Well, remember that this is the highest probability trend trade. This is your $400 on 2 contracts. At the end of the week, that's $2,000. At the end of the month, that's $8,000. At the end of the year, that's $96,000, guys. And what happens when that 2 lot turns into a 10 lot? What happens when that 2 lot turns into a 15 lot? What happens when that 2 lot turns into a 4 lot? Compounding through contracts, through better trades, more contracts, rather than trying to chase every trade in the market. Guys, keep it simple. Keep it focused. Embrace advantages. And for Pete's sake, post your pictures in the room, right? Let me give you that feedback. Guys, I'm going to take a minute. Our first hour lasted an hour and a half. I love it. When I come back, we're going to take a look at your charts. Whoops. We're going to take a look at what you're doing. We're going to talk about the advantages, but we're also going to scroll back, guys. I don't care about the live market today. We're going to go historical today, and we're going to talk a lot about, not closing out your charts in the middle of class. I'm going to open up the NASDAQ because the NASDAQ has a lot of opportunity. The NASDAQ has termination conditions that create full reversals. The NASDAQ is going to have these opportunities. We're going to circle and look, and we're going to see how we could do on the day on that simple process of looking for $300 per trade. I'm going to leave the NASDAQ with you guys. It moves fast. But look what just happened. Termination to termination to termination to termination. We have a clearly defined area where rule number 2 isn't met. And it's easy to say it either breaks here or it breaks here, or I do absolutely nothing because I don't have the advantage of a clear path. It keeps you from hoping. Guys, I'll be back in about 5 minutes. Mic silence for about 5. If you have a question, post it. If you have a picture, post it. If you've never posted a picture in my room, do it right now. I don't care what it's a picture of. It can be of your favorite video game, whatever. Get in the habit of posting now, guys. Give yourself that advantage. I'll be back in just a second. All right, y'all, here we go. Wow, it's 10:43. Holy smokes. It's been one of those days. And look what happened on the NASDAQ, guys. We defined areas that had to break in order to take a trade, in order for rule number 2 to be met. And it still hasn't happened. You didn't have to guess, right? Divergence lows, didn't make it. Divergence low, resistance. They're trying, but we're not there. So guys, here comes the second half of class. I am going to scroll to the top and I'm going to look for your comments. I'm going to look for your pictures. And we're going to talk about what you've seen, what you've done, what's going on. And I'm going to show you some great examples of how to annotate a chart too. So I'm getting up to the top right now. And then Gary got us going, it looks like. So Gary's taking a look at a chart right here. And what Gary's done is he's put his checklists on his charts. He says, you know what? My rules are my Bible. This is my go-to. This is the most important thing to me, is to be consistent. And sometimes, guys, you're not going to be in a position to trade. And if you're not, you can still go back and annotate. And that's what he did here. He said, look at all of these advantages. He's like, I had odds favorable. I had no termination conditions. Everything said go. Everything said rock on. He's pointed out his entry. He's talked about the divergences that may go against it. He's annotated the heck out of this chart to make sure that he's reading it correctly. And guys, that's key. Even if you're not taking a trade, annotate the chart. Get your chart reading. Post it in the room, right? And say, hey, Mark, this is what I see. Am I seeing it right? And I'll tell you right now, the people that are posting in this room are the people that are reading their charts well. Ron says, this market is absolutely nuts, bing, bang, boom, but I've got that odds favorable and I've got room to get from one spot to the next. Ron, great trade, taking advantage of momentum. Momentum is key, guys. Gary, everything says up. It's one of those 50-50 trades. Price pulls back to a mid band right there at the large triggers. Guys, this is a beautiful trade. And I know he even put the note on there. Mark, I'm still waking up. Don't yell at me for not taking this trade. What a great read, though. Two charts. Smalls above the large are wide. They're angled in the direction of the trend. Price has not reached that divergence high. This is one of those 50-50 trades. And it's a 50-50 trade with strong triggers. It's a 50-50 trade without divergence, with a small window of opportunity. And remember I said these moving averages are moving averages. That mid-band's right on top of the large, guys. That's a beautiful entry for easy profits. Great look, Gary. All right, scrolling up. Guys, I have to scroll up and down. So if I miss a question or a post, let me know, please. Don't let me get away with that. Alan, let's see what you did. I bet it's brilliant, whatever it is. Alan, you said 50-50 look, right? Smalls below the large are wide. They're angled in the direction of the trend. And Alan, I think that there's something pretty important here too. So I'm going to scroll down just in case we got some comments. So it is a termination condition that creates a full reversal. I appreciate that look very much, right? But it's a 50-50. And guys, what are the areas that aren't broken? I've got multiple Fibonacci areas. It's not one area that I want to break. It's multiple areas that I want to break. And then Alan says, you know what? I'm not willing to give away that advantage of momentum. And when divergence prints, per the keep it simple checklist, I'm simply not going to take the trade. And it looked good. But you weren't willing to forfeit the advantage, and it kept you out of trouble, didn't it? Doesn't it feel great when your rules keep you out of trouble? And guys, it takes repetition, right? We've all taken this trade. Most of us have lost it and blamed the market, right? Rather than the recognition. Alan, great restraint. Good job sticking to your plan. And your plan may grow a little bit, right? It may change as time moves on. But I think you nailed it there. And then we've got another one, Alan. Let's see what it looks like. High probability trend trade, thinking it was 50-50. Well, it was. Oh no, this one wasn't. This one was high probability, right? Entry at the mid band, inside, clear path, odds favorable. That's the one. The divergence had broken. So great recognition going by after the fact. And guys, it's a process. The first thing you're going to do is you're going to process odds favorable momentum. And then you're going to process termination conditions. And then you're going to process entries, right? And sometimes you're going to make mistakes. And it's okay. Divergence had broken. The triggers had gotten to the other side. Didn't see it in the moment, but you saw it after, which means you're going to be a little more aware as you come through. Who was asking about stops? Let me scroll up and see. Tan, are you in here? Looks like he may have left. I'll send him a private message about stops. So let's go to the next picture. Let's see who's next. Not a ton of pictures today. Gary gave us one. Let's take a look at it. So for the HVA, Gary, you're looking for a potential long coming from a termination condition, right? And the triggers didn't roll. Your checklist, once again, keeps you out of a trade when the rules aren't met. It's very liberating, I think. It's very liberating to only have two possible scenarios to get in to happen, right? If your rules are met, if your checklist is met, if your plan is true, guys, you're morally obligated, not morally, you're obligated to enter that trade because the rules have been met and the rules provide more winners than losers. You've proven it, you've studied it, you've tested it. And that same thing, what's the other side of the coin, guys? If your rules aren't met, you're obligated to sit on your hands, to wait. Because if the rules aren't met, then you don't have an advantage, guys. Nexgen provides you so many advantages. And the hardest thing that you'll ever do is absolutely nothing when they're not present. To not let that opinion form. To simply wait for the absolute best of the best. You're worth it. Your trading's worth it. John Novak came in the room and he said, with odds favorable momentum coming from a termination condition and a pullback to the area right there at the large triggers, he'll take this one and make a little money on it. Guys, I want you to see it's not favorable large triggers because the synthetics aren't wide and overlapping. But it is large triggers, and not only is it large triggers, but the only areas, the only potential entry spots are inside of those large triggers. This is chart reading coming from a termination condition, creating an advantage, using Fibonacci, and having it at those large triggers, creating enough advantages to say, you know what, this is my trade, I'm going to take it. I think it's a beautiful trade. And then Alan, once again, we have that 50-50, the 13-2. Synthetics weren't through the fib, right? So you chose not to take it. And that divergence, it pushed all the way up to resistance. And then you do have that clear path, right? And had you taken this trade, it would have fit the rules. But it's not the best odds favorable, is it? This is kind of an exhausted market. The smalls are trying to break out. The smalls are still inside. You've had two losses of momentum. There's a lot of loss of momentum there. And then your areas are starting to fall beyond those favorable large triggers, which creates challenges as well. And you have anything can happen triggers. Alan, I think this is a great read. And I think that's not enough advantages to feel good about taking the trade, and you stuck with it. And then Bobby, bad bottom, what does that mean? Bad bottom means that it's not a termination condition that creates a full reversal, right? So it's not necessarily a killer. You just don't have that advantage. But then it's a 50-50. So it's a 50-50 coming from a bad bottom. If you're using that keep it simple, that's 2 marks against it, right? And then 1 tick from a termination. 1 tick from that fib. Guys, this is going to be a judgment call on your part. I don't have a definitive answer. But I want to share a picture with you. This is how fibs come to be. When you open your software, the market, the T3 Fibs Pro Trader is going to analyze the data set for the last 10 days. And there's literally thousands of individual Fibonacci calculations. And if you spent several hours prepping 10 time frames of data, you could calculate these manually, but why not just let John Novak do it for you, right? But the magic is the Fibonacci area depends on 2 things. Which lines are the most important and which ones have the highest concentration, the most important Fibonacci levels. So when my fibs are coming to be, guys, it looks like this. And if you're my age, you remember Yar's Revenge, and it's kind of what it looks like. You need that fly shooting through it. But these are all areas, and these areas get whittled down and consolidated a little bit so that you can ultimately have Fibonacci support and resistance. So you kind of have to ask yourself on this one, Bobby, is 1 tick off of that accumulation point good enough? Well, it might be worth it, right? You might say, well, 1 tick's not going to scare me off. I'm still going to take that trade because of odds favorable momentum. But then your chart reading kicks in. You go, well, it's 1 tick off and I'm 50-50. And that kind of creates a problem. And I'm 1 tick off and it's 50-50, but it's coming from a bad bottom. I feel like things might be compounding. And then it's 1 out, 1 tick off, and it's 50-50, and it's from a bad bottom, and divergence prints on my smaller chart. So I'm kind of compounding. I'm using chart reading, and I'm making a decision. And you said that divergence, you went ahead and said, I'm going to cancel the order. I don't like the idea of that one. How did that turn out? I think that was a pragmatic decision. I think that was a good decision based on solid chart reading. And the problem is, and I don't know what happened next in crude oil. It would have run you over. Well, there goes the example I was going to make. Sometimes it's still going to work, but it's not that high probability. So, Bobby, your chart reading kept you out of a loser there, which means that your winners get to be winners even more. They're not making up for losers. Great job. Great read. Thank you for sharing that. And I love that you canceled the order. But you see how it's all chart reading? Everything is going to go back to chart reading, guys. And you nailed it. 100%. Bobby, you're going to get the microphone next week. I'm going to let you teach the class. I bet you could. Not a chance. It's scary. So now what do we have? Now we have a termination condition that creates a full reversal. I've got a good bottom. I like that on a 50-50. It is a 50-50. Small's above the large are wide. They're angled in the direction of the trend. Divergence hasn't printed yet, right? So maybe this is, you're waiting to see, but you've already identified where that market's likely to continue. Guys, this is a pre-trade picture. Look how much time he had to go through to use this checklist to see where he's at. That's an awful lot of yeses, isn't it? I said that your chart reading may take one of those things off. With this many yeses from a good bottom, there may be a point in your trading, Bobby, where you say, you know what? Divergence isn't going to scare me out. Divergence isn't going to be a reason not to take the trade. Until you're consistently winning, though, why not give yourself that advantage? And I like that you're waiting to see. One thing I'll do, too, is I may activate my limit order. And then if divergence is true, I'll just cancel it. And I'll say, you know what? Rules aren't met. Can't take the trade. Great pictures, Bobby. Thank you for sharing those. This is how we do it, guys. Every day, post a picture, ask a question. Gary, looks like maybe a termination. Back. That just looks like a whole lot of nothing, right? 3 divergences from support. Support's likely to hold because all the triggers are above it, but the large triggers are against. The synthetics are flat. Just kind of waiting. What a great holding pattern. Let it clear out. 50-50 from a bad bottom, multiple divergences, didn't make the mid-band on the first one, and after the second one you said, I don't need that. Don't need that headache. John, termination condition creates a momentum style trade. Quick profits on a momentum style trade. Loss of momentum and you're out. And then that termination that creates the full reversal gives you odds favorable momentum. You're out of the momentum short, and then boom, right into that trend trade and get paid all the way down. John Novak, that is some heads up trading. Do you guys see what he did? He took the first trade that you're not ready for yet, right? 25 years he's been reading charts. He took the first chance, managed it assertively. But just because this trade ended doesn't mean that he didn't have the rules met for a high probability trend trade. He took it and got paid again. Gosh, that's pretty. And he said it. Guys, it's right out of the book. If a termination condition holds, let the triggers roll, take your first shot. Then if everything is strong, turn it into a trend trade. And if that trend trade goes down to support, let it hold or let it break. If it breaks, you're going to go back to looking for trend trades. If it holds, you're going to start going the other direction. Nice work. All right, Gary. So Gary says pivot from space or termination with overrun. Let's look at it. The smalls make it through and the large don't, right? So it's not a clear path. But guys, these are areas. We just talked about how they're made. Sometimes odds favorable momentum might push you a little bit beyond the area. So is there something that you can use to help you decide whether it's a little bit of overrun or whether that market's likely to continue? Guys, do you remember 3 divergences in the same price range? This may be overrun. Large never cleared, smalls are losing momentum, and then I get 3 divergences in the same place. This market may push lower. Does that make sense to everybody? This is great chart reading. Sometimes areas are going to overrun a little bit. You can use that smaller chart divergence to help you decide if that's the case. Nice picture, Gary. Iceman giving me a picture. I love it. So let's take a look. All right. First arrow to look at. So we have that little bit of overrun, right? The 50-50, and it pulls all the way back to support. And then everything starts to turn, right? Everything starts to agree. Everything says up. It is in determination conditions a little bit, Iceman. And it doesn't really make it back to an area inside of favorable large triggers. What you're kind of witnessing right here is you've got an area that tried to break and it pushed all the way down and the market kept up. And then there's an area that tried to break and it pushed all the way back down. Do you notice how your large triggers didn't follow? When your large triggers don't follow, price is likely to come back up. Ultimately, everything agrees. I'm not saying that's a real high probability trend trade. It's not. But if nothing else, that giant gap keeps you from trying to short into support, termination conditions. And we're just waiting for the area to break a little bit. Does that make sense? Is that kind of how you saw it? That darn rule number 2, keeping you from trading into areas that may create a bounce. One tick off, Jose. Can this be considered a good top? What do you think? Goes back to that judgment call, doesn't it? Jose, if it took 5,000 calculations to create one line from all of those lines, can you consider price stopping a tick short and none of the triggers breaking through? I could call that a termination. I could feel good about that. And then when that termination creates the full reversal, I like it. I would say yes. But I'm gauging to see what happens. And where was that market? Which market was that, Jose? That was this one right here, right? What did our 5-1 chart say up there at that potential termination condition at 10:15? Almost made it, loss of momentum on 50-50s. Then a lower divergence, and it scrambles a little bit, and ultimately it goes down. There wasn't a lot to do with it, but I would say, yeah, that was a good top. And if there was a 50-50 right here, I may have taken a shot at it. But it was a good top just to get you all the way down to a termination condition, right? Never gave an opportunity so much on the way down unless you took that momentum style trade. Good question. John says he took a trend trade. Everything said down, and he pulls back to the mid band and goes down. Use the one-to-ones for targets. Nice job, John. Alan, 50-50, divergence prints, canceled your order. Guys, I feel like you're starting to believe the rules a little bit. I feel like you're starting to embrace advantages. Warms my heart to see it. 50-50. That's not even a 50-50, is it? Bobby? So Vin, I'm gonna put it back on you. I want you to do this for me. I want you to write your rules on your chart. I want you to tell me why you did what you did. And let's see if we can figure it out by using this checklist. If you need help with what to write on the chart, there's that high probability trend trade checklist. Go through it. Take a look at it. Guys, I will talk to you all day about what you're doing. The goal is to get you to where you don't need me, right? Where you can open up your picture and you can say, hey, and we'll do it together, Vin. So let's see. Did you get in because of this uptrend? Okay. Did you get in because of the odds favorable momentum? That's rule number one, right? Smalls above the large. So far, so good. So Vin, here's the next part. And this is why annotating your charts is so incredibly important. So Vin, price reached resistance, and absolutely none of your trigger lines broke through that area. What do we call that? Do you remember? Rule 1 gives us momentum. That's an absolute yes. Rule 2 gives us a clear path. And this was a no. So what you did is you traded into an area that may reverse the market. You traded into an area that was a termination condition. And the recipe for those termination conditions, whoops. If price reaches an area and the trigger lines don't break through, this is an area that may reverse the market, Vin. So by writing the rules on the chart, the first thing that I notice is that you don't have a clear path. Does that make sense? And it doesn't mean that the market has to stop there, but it means that we're taking away that advantage, right? We're taking away the advantage. There is something in the way, something. Yeah, so you want to get through it. And then rule number 3 says that my entries come from an area inside of favorable large triggers. Does that make sense? So let's write it out on your chart 100%. Rule 3 says I'm going to use a limit order, which means that I'm going to wait for the market to come to me. And it's going to be at an area inside of favorable large triggers. So then, even if we didn't have the termination condition, your best of the best entry comes from down here, right? This is the spot where the market's likely to pull back to and where it's likely to continue with a clear path. So when you go through the checklist on this one, I think it's a great read. It's a great, hey, I'm newer at this read. You embraced momentum, which is key, guys. I get excited when I see mistakes happen with odds favorable momentum because it means that you're really believing in that advantage. The second piece of the puzzle is recognizing those termination conditions, making sure that you understand that the market's reached a place that may create a bounce. Price may react to it. And this is also one of those 50-50s. Your large triggers are way down here. But everything lines up right around 44.10. And that was the S&P, right? Let's see what happened around 44.10. And that was 956-ish. I'm trying to see where we were, see if I can line it up. Was that from today? Should have been somewhere up around here, I think, and the market does end up coming back. So then does that make sense? You're trading with direction, which is amazing. So that would have been 11:02 my time. Termination condition wins, right? And I think that, and I can't stress this enough, I believe that you trading with the momentum. Hey, Paul, good to see you. Can you hear me? You okay? Great to have you in the room. Trading with direction, trading with momentum, then you're off to a great start. So the next piece of the puzzle is remembering that these fibs, they can be a market stopper. They can keep the market from continuing in the direction. This is where people react to them. And then when you do have that clear path, then incorporating rule number 3. But what I really want to do is I want to thank you for posting in the room, right? Because if you just sat on your hands and said, this trade didn't work, then that would be problematic. One thing that I noticed, Vin, is you don't have stops and targets in place right now. Do you know how to set up your stops and targets? Because one of the great things about what we do is we can minimize risk dramatically. But it takes stops. You placed a stop limit to get into the market. So at what point then are you going to exit this trade because it's gone against you too far? Notice how you don't have anything protecting you, right? And at what point do you want to get out of it because your profit targets are reached? So that's what we call the ATM strategy. And guys, one of the most important things that you can do is preserve capital. Because even when you follow the rules, those high probability trend trade rules, 70 to 80% of them are probably going to work. So what you're going to need to do is set up your ATM strategy. Set up stops and targets. Oh, for sure. No, I'm with you. I understand how you got in, but here's the next step. Is making sure that you have a protective stop in place, making sure that you have targets in place. So every time you enter a trade, and we'll use just my S&P for example here, your ATM strategy for example, this one is a 2-lot strategy that says if I enter the market, my first stop, my second stop are at 12 ticks. My first target's at 8. My second target is 16. So if I just jump in the market, order filled. I've got stops in place. I've got targets already established. And what this does is if the market goes against me, if things go wrong, I've got a protective stop. If I've identified a trouble spot, I can put my target maybe at that trouble spot. If I'm holding for bigger moves, I can move my second target maybe to that next fib, right? So what I'm doing is I'm assuring myself if the market comes up to 44.0925, I don't want to be in this trade anymore. My stop's going to pull me out. And guys, this wasn't a real trade. This is not a rules met trade. This is me on simulator explaining that stops and targets are a way that we preserve equity. It's a way that we preserve our capital by identifying where the market shouldn't go. Target filled. And I'm going to shut that one out. But what that does is it keeps me from hoping, right? It's saying this is where the market shouldn't go. And because this is where the market shouldn't go, this is where my stop is going to go. And because this is where the market should continue to, this is where my target is going to be placed. So then, if you need help with that, let me know. But getting into the market protected is such a big part of what we do. John, small's below the large are wide. It is into a divergence low, and you made the choice to take it because of no divergence, because of the areas. Gauging advantages, 3 divergences going up. Hopefully that one worked out well for you. And guys, here's your S&P, trying to figure out what it's going to do, right? If you ever open your, or try to scroll between charts and you have an untitled workspace, it'll give you a blank screen, sorry. Here's crude oil. Weak triggers, large not through, divergence prints, right? Multiple divergences on the 5-1. Not going long here, thank goodness, because it pushed lower. Not going short because everything is still up. We're in a little bit of a holding pattern. Just waiting for the best of the best. It's either going to hold or it's going to break. Guys, look at all of this nonsense on the 5-1 when things don't agree on the 13-2. It's so easy to stay out of these opinion trades. And then, guys, that was John Novak short, right? Some of you might have been a little more conservative, waited for odds favorable and a clear path. And that pulls right up to resistance inside of favorable large triggers, doesn't it? And guys, that thing is absolutely screaming down. Then you get 3 divergences. You may not have been a part of that one. First shot, second shot, guys. 2 divergences don't scare me out. Look at the split triggers. The larger one, the smaller down. Your window goes from 42 to 48. That's 6 points. It's about $120 risk. That's a beautiful trade. That's a rules-based trade. And if I scroll back on the NASDAQ, guys, it's absolutely amazing how many opportunities there are. This is the NASDAQ, David. The NASDAQ is like that cousin nobody talks about that does meth. Being right, being conservative pays dividends. When it's good, it's great. When it's erratic, it's difficult to trade. So I'm not opposed to the NASDAQ at all. I actually trade it. But I trade it because I'm comfortable with my rules, because I'm comfortable with finding entries in a slower, smoother market. because the NASDAQ will do this, and you have to have some resolve. That's your lowest point inside of favorable large triggers. That's your highest to lowest. It never goes outside of the window. There's a certain level of trust in your rules that has to be there. This entire move is 18 minutes. I want you to see this. This is your last hour in NASDAQ. It is a fast-moving market that presents a lot of opportunities, and if you wait for termination conditions to create full reversals, you're going to give yourself some advantages there, guys. But until you are comfortable with your rules, stay on the charts that are easier to trade, right? Learn your rules, practice them. Not a termination condition, Gary. Why not? Well, it's on the 5-1, and it's not 3 divergences, right? Where do termination conditions happen? They happen on the 13-2. That's just a divergence low. That's all it is. Nothing more. But what you don't have is really a clear path. Your smalls are still trying to break through. You don't really have odds favorable momentum because your large triggers are flat and lifeless. That's just the market bouncing off of the divergence low, but not a termination condition. Does that make sense? Guys, termination conditions come from the 13-2. You took that 50-50. All right. I don't know how it worked out. I hope it worked out for you. Now it's a 50-50, right? It wasn't before. Before it was a termination condition right here. You could identify your trouble spot. Now it's a 50-50. But it's a 50-50 from a bad top, right? It's a 50-50 with divergence. I don't ever try to put bad juju. I'm glad you got paid, Jose. Great management. And that's the second piece of the puzzle, right? Gauging your advantages and being willing to manage. A willingness to manage trades, guys, is going to eliminate hope. And when you eliminate hope, things kind of work out a lot better. Keep it pragmatic. Keep it focused. Here's something for you guys that are on your journey a little bit. How about 6 signs that you know you're maturing as a trader? The first one is that you manage your risk, and then you manage your reward. Jose just gave a great example of that. Stops in place, aggressive targets management, right? Making sure then why we have stops in place. Because if you give it all away on the losers, it makes it hard to let the winners turn into anything. This one I love, and most people can't believe that that's even a thing. Completely relaxed when making trades. Completely relaxed when making trades. Why? Because you're trading per your rules, right? And your rules have proven to win more than they lose. That's a big one. When your palms stop sweating, guys, you're making strides. You don't force or chase trades, guys. If it doesn't hit your entry, it's just not your trade. If it's already gone, it's not your trade. You're cool with that because you know that there's going to be more opportunities, right? Trading shouldn't be your adrenaline fix or your entertainment, guys. This is a career. This is a job. This is a job that can create enormous wealth. This is a job that if you treat it like a game, can remove enormous wealth. So focus on the advantages, right? Get your adrenaline. Go jump out of an airplane. Go backcountry skiing, right? Wrestle a grizzly bear. Get your adrenaline someplace else. The absolute most important, and man, I'm seeing great examples of it today. You follow your trading plan. Not you follow your trading plan when it's convenient. Or you follow your trading plan when you're not bored. But guys, you follow your trading plan. Your trading plan has proven to you that it wins more than it loses, right? It provides a statistical advantage. And this is a big one in the classroom. Your worth as a trader and your worth as a person are two separate things, guys. Some people feel embarrassed to post a loser. It doesn't make you a bad person. Unless you kick a puppy after you lose a trade, losers are a normal part of trading, guys, and they're definitely a normal part of the learning curve. Doesn't make you stupid, it makes you new, right? Doesn't make you a bad person. Guys, it's just part of the learning curve, which is why I encourage you guys to share it every time. Share it. Show me what you're doing. Talk about what you're doing, right? Bobby says, this is a 50-50 from a bad top. Divergence prints, but he took it anyway. Notice Bobby didn't put his rules on this one. Auto break even moved at 10 points, but your first target didn't get filled and it got you break even. Cost you commissions, right? But is it a coincidence? And guys, this is part of that accountability factor. Is it a coincidence that the 50-50 checklist didn't get put on that one? Or is it Bobby saying, you know what, I'm going to break my rules, and since I'm breaking my rules, I'm not going to put them on the chart? And that's normal. Congratulations, Bobby T. You're human. I know, but that happens. I used to do it. You know what else happens, guys? Is you'll take a loser and you won't take a picture of that one. But the second you win, you can't wait to put that picture in the classroom, right? Hey, look at me. I'm so smart. That's human nature. But Bobby, it's a 50-50 from a bad top with divergence, right? I've seen your checklist. It was close to not being a 50-50. Okay. I was close to being good looking, but my face got in the way. Horseshoes and hand grenades, right, guys? Horseshoes and hand grenades. It was close, but it was also a bad top. So let's talk about something. We'll use Bobby's chart for it. Guys, anytime I have a bad top, anytime it's not a termination condition that comes from, Fibonacci that reverses the market, I'm going to respect the mid-band just a little bit more. Why? Well, because these guys didn't make it to fibs. And I'm in an uptrend. And it looks like I'm coming from a termination condition. So I have a termination condition that creates a full reversal that gives me odds favorable. The market loses momentum and it pushes back. This mid-band becomes a potential trouble spot, guys. This is kind of next level chart reading. Which means that if I have a 50-50 near that mid-band from a bad top with divergence, I'm just giving away advantages. And a lot of the times, let's look at crude oil. Let's see if it did it. A lot of the times that mid-band holds. Trying to figure out where that was. I think it was this one right here. I didn't see the timestamp. Right around 11:12. Oh, it was yesterday. Okay. But a lot of times, guys, bad tops, the market continues the move. And you'll see this a lot. Bad top hits that mid-band 50-50-ish, and it continues the move right to the fib. Bad bottom comes up to that resistance up top, and this is where the market sorts itself out a little bit. It went full consolidation for a while. And you'll see these patterns over and over, guys, and this is one of the reasons why we talk about good tops, bad tops. There's a bad top that came all the way back to support, just about to the mid-band. Do you notice how those trigger lines didn't even blink, did they? Those large triggers are still cranking, full tilt, all the way to the upside. Now I don't have odds favorable, but I do have a clear path. My triggers are split, but I do have areas, right? Making decisions. It's all chart reading. Whoa, what is that? That's the NASDAQ. Do you guys mean to tell me that from a bad bottom, it pulls all the way up to the midband and resistance and goes all the way down to support, darn near to the tick? Pretty cool, isn't it? And this termination condition creates a full reversal. This full reversal gives odds favorable momentum. Here we have split triggers, and you guys want to see why we focus on areas inside of favorable large triggers? I'm going to go through everything right here. I have a termination condition that creates a full reversal. I have a full reversal that creates odds favorable. Large triggers aren't a full bar away from price, therefore it's not really the gap theory. I get a reversal bar and it doesn't have divergence, right? Guys, check it out. From the highest point of my triggers to the lowest point of my triggers. Where's my window of opportunity? From the highest point of support to the lowest point of support. If you got in at the highest point of support, it gave you an opportunity probably to make your $100. Go break even, get stopped out. But look how price closes the gap back to those large triggers, right? Guys, this happens so often that split triggers take away an advantage. So much so that in my own spreadsheet, guys, let me see if I can find it. I've got a picture of split triggers. And my picture of split triggers has the one that I show in classroom as favorable, as the best of the best, the smallest window of opportunity. And then I see my split triggers, and price goes back to those other triggers, guys. This is why it's so important that they trend one on top of the other. This is why we teach this every day when we talk about entries. Because price may return back to those synthetic triggers, which means that if they're 4 points below the large triggers, you run the risk of getting stopped out down there. Does that make sense? I hope so. And that's exactly what happened here. Why can't you trade NASDAQ, Jose? Is it a Canada thing? Oh. Can you put it on 7 and execute on 8? Boom. What do you think, guys? Odds favorable. No terminations. Pull back to the area of support inside of large and synthetic, which are trending one on top of the other. One divergence doesn't scare me, pulls me right back. That's what I do, Jose. I don't have any problems trading NASDAQ because I do all of my research. I do all of my analysis on NinjaTrader 7, and then I run one single NASDAQ chart on 8. And I do it with no synthetics. This was the NASDAQ. This was an edge trade using that gap theory. That was crude oil. That's a trade that didn't work. That was NASDAQ. That was just a high probability trend trade. But you see how I have 7 and 7, and then I execute on 8? Guys, I got in at the area inside of favorable large triggers. I took profits at the first trouble spot. I took profits at the second trouble spot. I trade the exact same plan that I teach, guys. This is what I do. They're the same templates that are in NT8. Let me see if I can help you out a little bit here. And let's see if it'll let me do this. I'm using 34.5 and a 13.2. And I'm not sure if this will work in the room, but I'm going to try it. No, that didn't work. I want to say that he's got me on 5 days because it's so volatile. Yeah, I'm looking at 5 days on NASDAQ because there's so much tick data. So 5 days back. And then you should be able to use the same templates. And Jose, if you need those templates for 7, let me know. I can get them emailed to you. You can reach out to John or Jason. He can get you taken care of. Either way, we'll get them in your hands. But guys, that's a high probability trend trade, isn't it? That's the best of the best. So this is where I ask you new guys. Iceman, Paul, Gary, Philly, Ven. Do you see it? Termination condition creates a full reversal. Full reversal creates odds favorable momentum. Odds favorable momentum. I get a reversal bar, a window of opportunity. I take the entry. My stop is where the market shouldn't go. And absolutely nothing changes until all the way up here, guys. Is everybody good with that? Because this is what I teach every day. Every day, every day, every day, every day. Same thing, guys. I'm like a broken record. My wife walks by the room. She goes like, "What's up, odds favorable momentum? What's up, no termination conditions?" She doesn't even look at the software. She knows the verbiage. Guys, your goal is just to build trust, just to get to a point to where you're comfortable. There's 3 divergences in the same location. That might terminate a trend. There's smalls breaking above the large. That's a pretty good look of momentum. My large are not through the area yet, but they're getting there, right? Now I have odds favorable momentum. Now I have no termination conditions. Now I'm just saying a little prayer. Give me a pullback. My rules are met. Then absolutely it is. How come? Because you don't have the reps. But do you see how quickly I just did that? Then that's because I've taken 11,000 pictures. That's because I've studied this every day. Do you want to be able to see it in real time? I'll show you the easiest way. I ask you guys to do this every day, and I would wager to say nobody does. Guys, who has clicked on all of these links? Who's clicked on all these pictures and said, you know what? I'm trying to learn entries. I should probably burn into my brain what the perfect entry looks like. Have you done it yet, Vin? Because I promise you, after 200 pictures, it's going to get easier to recognize in the moment. I promise it will. You'll get to the point to where your analysis literally takes 3 to 4 seconds. And you'll say to yourself, I have smalls above the large and the large are wide. And there's absolutely no termination conditions. And I'm saying a little prayer that this 1-to-1 gives me a bounce back to an area inside of favorable large triggers. Back to my highest point of support, my lowest point of support, because this is a rules-based trade. This is a high probability trend trade that's happening after a termination condition on the 13-2. And the only thing that I can't control is whether or not I get a pullback. And if I hit 44.1891, if I hit this fib, well, stinks to be me, right? That wasn't my money. So then the easiest way to get good at this is practice, simulate. Show me your pictures. Tell me why you're doing it. And in the beginning, you're processing everything, right? You're processing the momentum. You're processing the terminations. You're processing everything on your chart. And it's a lot to take in. But it gets easier. And Iceman says repetition is the mother of all skill. They say practice makes perfect, right? Don't practice wrong. Don't practice the wrong trades, because that's just going to make things messy. Practice the rules, practice the advantages, practice recognition of the advantages. And how do you know you have it right? Because you posted it in class, because you asked. So this is it right here. Guys, I'm very passionate about this one today because of an email that I received. To minimize your learning curve, guys, you have to post pictures of your trades in class. If you're shy, work through it. If you're embarrassed, work through it. I don't know what you look like, guys. Change your darn avatar. Don't let me see your face if that helps. Come to the room. Instead of being Billy, be Bobby Sue. It doesn't matter to me. Fake names are fine, right? Post your pictures every trade. Win, lose, or draw. Good morning, Safia. Nice to see you in here. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure, guys. And how are you going to know the difference? To be sure, you need feedback. I'm here to help. If you place a trade on the simulator and participate in class, there's no risk of loss or capital. And guys, if you're not winning more than you lose, if you're not proving to yourself on simulator that you can make money consistently, should you be going and funding accounts? Should you be going and trying to pass Apex accounts, hoping that you get lucky enough to fund it? Guys, that hope isn't going to carry you into a long-term career. You need someone to tell you what you did right or wrong. I'm the warm, fuzzy Novak, and I'll give you everything that you need to be successful. All I need from you is to post your pictures, guys. This is what we do. Use the outline for education. What is that? That's that path that we talked about. Your outline for education tells you exactly what I just told you. Learn the rules, simulate, simplify, do market replay. Post trades in class with your entries and exits with an annotated chart. Guys, write your rules on the chart. Every time you take a trade, write your rules on the chart. Tell me why you did what you did. That's the easiest way for me to help you. Study historical chart setups. Scroll back, circle tails, look at entries. Use the pictures from live class. Guys, steal them. If you look at my spreadsheet, I've got Bobby T's name in here. I've got Safia's name in here. I've got Gary's name in here. Then I think I have your name in here maybe. Tan's name, Paul's name, Debbie's name. Guys, I liberate your pictures every day to make me a better trader. Create 15 images a day, guys. That's 300 pictures a month. How do you get better in the moment, Vin? Take as many pictures as you can. Present them in class, annotate it, use your checklist, right? Put them in your spreadsheet, go back and study them. And then once you're getting your entries, guys, once you have entered the market at the right spot, you're going to have to manage that trade. Define your management plan. Keep it simple. Keep it mechanical. Keep it methodical. You can alter it when you're done with the education, when you can read your charts fully. Guys, this is how you get to where you want to be. And when you are winning more than you're losing, when you're taking the correct trades, when you've proven yourself that you can make money, that's when you say, all right, everybody has a plan until they get hit. The first left cross you take is switching over from simulator to live. The pucker factor is real, guys. Simulator's easy. Who cares if you lose simulator money? And the second you go live, your brain's going to say, we have to win, we have to win, we have to win, right? And losers are going to shake you, even if they fit the rules. And winners are going to get cut short because you don't want to give it back because now it's real. Guys, that's where places like Apex help you out. They're going to test you when you've already proven that you can win more than you lose. Because when you go live, you're going to have to add that next level, right? How are you going to react? Some people react great. The people with the more repetitions, the more feedback, the more pictures, they handle it better. but most people change their plan a little bit, guys. That's where Apex is hugely important. But Apex should only happen, life should only happen once you always take the correct trades and guarantee yourself you can win. Can't stress that enough. Just because it only costs you 50 bucks a month, guys, psychologically, it sucks to blow out Apex accounts one after the other. Let's see what you did, Safia. Safia says, everything says up from a termination condition. Well, this is exactly what we talked about. What a beautiful trade. What a wonderful entry. Did you get in too early, Safia? Let's see. How come? You got in at the top of the window, right? You got in a tick above support inside of favorable large triggers. It looks to me, Safia, correct me if I'm wrong, that when that termination condition created full reversal and that market was screaming to the upside, the only thing you did with this entry is guarantee that you didn't miss it by trying to catch the midband. This is the perfect entry. I could teach a class on this entry. Your stop went where the market shouldn't, and absolutely nothing changed all the way up. Safia, beautiful trade. It's amazing. You didn't take the first one because there was a fib. You took the second one because it was 50-50 with every advantage. It's been a while. You've been ignoring me here in class, so I'm going to steal your picture. Great trading. Beautiful trade. Guys, that's the best of the best. That is the absolute best of the best. You couldn't do this any better. Steal this picture. It's amazing. Bobby T. And that's perfect rules following, Safia. Bobby T says, everything says go. Odds favorable. Clear path. And he's just saying triple dog dare you to get back to that area. Absolutely. Look at all of the yeses. Every time, 100%. Faith in the rules, trust in the rules, belief in the strength of the rules. Oh no! Oh my gosh. Are you better now? I hope. I get that. I tried to learn how to trade after spine surgery. That's the wrong time to do it. Good. I don't wish back pain on anybody. I have it. I still can't feel my leg about 50%. So, Bobby, the perfect pre-trade. No, you probably don't want to trade drugged up. So guys, now we have a termination condition that creates a full reversal. We have a full reversal that gives odds favorable momentum. We have a 50-50 trade here. And the 50-50 trade has divergence. Some of you aren't taking this trade. Some of you are saying, because of the strong bottom and the momentum and everything says go, I'll give it a shot. And if you did, you got in and your stop's in place, but it's still a 50-50 with divergence no matter how much you want it to work. Crude oil, Bobby. I think we're missing a fib on yours. $13,251. Arg. Bobby, I had a fib there, which puts you at a 50-50 with divergence. But if you didn't have a fib there, that's perfect, isn't it? That's the best of the best. Yeah. Are you 10 days back, clearing out your data, all that good stuff? Joel, beautiful. Got in a little late. Beautiful trade. Waiting for every chart to agree, right? Strong work, Joel. And Joel had the fib too. You may, because Joel just kind of confirmed that mine's where it needs to be. His is the same. Would have made a difference, I think. Maybe try this. Right click, take the template, and just reload the template, that 13.2, and see if that helps a little bit. And if it doesn't, the next thing that I would do, and you don't have to do this right now if you're trading, is I would go to Tools and Options, and under Data, I'd make sure that I'm on Do Not Merge. That's a big one. And then it's okay to go ahead. You have to disconnect to do it, but you can reset and repair the database and see if that changes it. A lot of times that will, if there's a challenge, if there's some corrupted data somewhere. You're welcome. And then if you need help, get with Jason, right? That guy can fix anything. And that's a good look. Paul, you had it. Outside, divergence does print. I like the entry. I think the stop may be a little bit further than it needed to be. But Bobby, there's your trade too with the fib, right? Even with the fib, those large triggers were trying to get above, right? You did have momentum. You're coming from a good bottom. And it just wanted to push lower, and that happens sometimes. Bobby, I don't think that fib would have helped you much one way or the other. Without it, it's a good-looking trade. Even with that fib there, it's a good-looking trade. The only thing, and Bob or Paul, this is on yours. Reversal bar with divergence outside of the outer band. One thing that I notice a lot is this divergence loves to find an HVA, right? This divergence loves to find an HVA, especially when it comes from beyond the outer bands. And that's kind of adding an extra chart. Yeah, 50-50 with divergence, you wouldn't have taken it. Try a little rebuild, maybe. Paul, did you catch that one? And guys, if you're using a market flow chart, sometimes there's information that I use that helps. So you have a reversal bar with divergence from beyond the outer band. That's pretty significant, right? That's an exhausted market, and now it's losing momentum, and it's losing momentum on both. A lot of the times, if the market's going to continue, Paul, one thing I've noticed is divergence. That 25 area becomes a pretty good bounce point. Divergence loves to push back to that high volume area. I see it a lot. I don't have a rule for it. It's just one of those things that I notice. And there it is. Well, it made it back to 30, not quite 25. We'll see what happens. Same thing, Alan. And your triggers look like it went through, right? Yeah, so that's strong triggers, clear path. And that's what I'm saying, Bobby. I don't know that this looked like a 50-50 in the moment. It may have looked very much like a clear path. Whether it's synthetic or not is irrelevant. It's whether or not the triggers are through, right? If it's on your 13.2, resetting worked, awesome. If in the moment those triggers aren't through, it's 50-50, right? After the fact, it looks like they exceeded. Here, at the time of entry, your synthetics are still trying to work through, right? They're kind of right there at it. Guys, this one's so on the fence. You could defend an entry. You could defend not taking entry. I think you could defend it either way. And this is one where you're gauging advantages and you're determining. Same one, right? Cool. So Alan, let's do this. Here's a lesson that we can take from it. From the bottom of the triggers to the top of the triggers, right? That's my trigger location. It does show the fib broken, yeah. Okay, perfect. That one right there. It does show the fib broken. It's just a high probability trend trade. Didn't work. Part of your 70%. So where shouldn't the market go? And man, we can use this one. Whoops. It shouldn't go outside of the window of opportunity. And this is one of the ones I like to show. So if your window of opportunity is 72.50, right, up to 72.54, I think 4 ticks below that window, 3 ticks below that window is probably pretty good. It gives it a little bit of overrun room. You're in at 54, you're out at 45. That's only 9 ticks. That's pretty acceptable risk for a trade like that. Wouldn't you agree? And yeah, so Bobby, this is why I'm saying I don't think that fib would have made a difference one way or the other. It sure looked like a good trade, and it looked like a lot of momentum. And it looked like a clear path. And I think that if I put a checklist on this picture, I'm obligated to take that trade. And then I just have to remind myself that anything that wins 70% of the time is probably going to lose. And then Gary, 50-50 with divergence. With divergence, you have to have a market flow signal. And did you get it? You did get it. You got the market flow signal. And it just didn't go, right? You followed your rules to the letter, but we're coming from a bad bottom. Bad bottom, 50-50 with divergence. We're compounding. What's my read on a bad top? It's a bad top. It's not a termination condition that creates a full reversal. What does that mean? That means that this 50-50 is probably less likely to work, but it doesn't mean that it's destined to not. So if you took an entry at resistance because there was no divergence, it went down 2.5 points, not much at all. And then that divergence prints on a 50-50, you're probably out of it break even. At this point, it's not your trade on a 50-50, right? Joel, I have to ask, why on earth are you looking at NASDAQ? Guys, if you're not so secure in your abilities, NASDAQ's not your chart, man. Close to a loser, but 80 is better than 0, right? Everything says down, momentum's down. The one thing that you didn't do on this run that you typically do is you let there be odds favorable momentum on the 13-2. You sidestepped your main rule, in my opinion. Your main rule says get in here and here. Get in here and here. That's not your best look, right? Triggers haven't rolled. Not advice, Joel. I don't give trading advice. Man, Ron, it's fun to beat you up. I never get to. Just kidding. I don't give trading advice, guys. I say that if you're not secure with your rules on a slow chart, fast chart's probably going to eat your lunch. Nice trade, Ron. Guys, it's been a good class. I should be able to, Jose. I have to figure out how to compress it, but I think I can. Worst case scenario is I can get John to do it. I'll try to get it over to you via DM. And I'll see if I can figure out how to do it. Let me see if I can compress a folder real quick. Guys, I'm going to teach myself something new. For NinjaTrader 7, I'm going to go to my templates. I'm going to go to my charts. And I'm going to see. Oh, compressed it to a zip file. And Jose, whoops, that should be them. It should be both of them. If you want to decompress it and double check, but that should be your NinjaTrader 7. Looks, guys, bad top, straight to the midband. Oh my gosh, it's going up again. It's almost as if we can identify patterns. Pretty cool, right? New users, demos. Thank you for being here. Thank you for taking the time to listen, to learn. Thank you for taking the time to ask questions. Please embrace the idea that the more pictures you post, the better your chances of success are. Older users, people coming back, looking for consistency. Embrace the idea that if you don't have a solid foundation, it's going to be difficult to look for so many trades. Keep it simple for a little bit. Put yourself in the best chance of success. Understand that day trading is a marathon. It is not a sprint. Nexgen has been here for 25 years plus. And we're going to be here for another 25, guys. We're here to work with you every day to get you to where you want to be. It's a two-part process. It's you doing your part and me committing to do my part. But if we work together, everybody gets results. Guys, I will be back tomorrow morning at 9 a.m. When I get here tomorrow